Respected Central Council members and Chairman Singh Nandaji, and our Central Council member from Hyderabad, Sri Sharma, and the land speakers of the day, Sharma and also managing committee members from Hyderabad, and all the professional colleagues from the entire nation. Very good evening and warm welcome. Friends, on behalf of the Hyderabad branch of SARC, once again I welcome you all to the virtual meeting on internal audit handholding for SMPs. I'm also delighted to have CA Nandaji, Chairman of Internal Audit Standards Board, and our Central Council member Sharma, and the land speakers for the today's webinar who have consented to enlighten us on the realm of internal audit and also inform us about various initiatives of the committee in this regard. Friends, it's vital to consolidate and build up capacity of the CA firms, which will in turn enhance their capability to address various problems that are being faced by the CA firms, which are attributable to the present complexities in the business. It's also important to conceptualize and implement various means with the ultimate object of strengthening the CA firms as well as small and medium practitioners and regenerate their practice portfolio. Thanks to Elm of Efforts and all the Central Council members for putting the wonderful efforts in this regard. Friends, Hyderabad branch of SARC has always been in the forefront to upscale the capacity of the CA firms and SMPs. And we have in the past conducted many programs in this direction. We have identified contemporary topics which are more relevant to the SMPs and have conducted sessions wherein eminent resource persons have shared their expertise and experience for the benefit of the members. Today's program is a unique one which explores the various facets of internal audit from an angle of SMP. Topics have been well chosen, which gives a practical overview of the audit right from the commencement of the audit and also encompassing the various key checkpoints in the internal audit. Friends, the resource person who have been aligned for the program possesses wide experience in this field, and I am sure that they will enlighten us on the crucial challenges with respect to internal audit and also from the client perspective and expectations from internal auditor. During the recent times, we have seen the role of internal auditors has been assumed more significance, and also there is a huge expectation from not only business people, from also regulators. As an internal auditor, we can play a vital role as an all-rounder so as to speak and chip in with a valuable advice which will also go a long way in the value addition to the business entity. Businesses are strained with multiple bottlenecks due to various factors. In such scenario, there is a constant need of someone to evaluate their business and give the best suitable advice for them and who will be more beneficial to them. The management is more occupied in handling a routine matters. At the times, their time is not sufficient and not capable to dealing with the various facets of the business environment, so that the internal auditor is having a very good opportunity to cope up with the businessman and support the businessman and give a value addition to the businessman. Actually, this is what actual businessman is expecting from an internal auditor. Friends, small and medium practices require more practical oriented support while undertaking such audit assignments, which goes beyond our traditional boundaries of statutory audits. Internal audit possesses such and consists of, based on my understanding, there are 3 pages. One is a risk assessment and risk response and reporting. The auditor needs to be aware of this purpose of each phase and the activities and the required documentation for each stage. Performing a quality work should be the hallmark of whenever a firm decides to perform audit assignments. Deliver a high quality and cost-effective services is the principal driver for the success of professional auditors. Quality service is also vital in relation to public interest responsibilities of professional accountants. The provision of quality services should always be a key objective in the practice strategy. Friends, considering the above challenges, we have planned this session covering the vital aspects of internal audit, which I am sure will supplement the practitioners to apply the standards consistently and effectively while performing an audit and review also. I'm also confident that this session will also highlight the plethora of opportunities in the domain of internal audit with the great advices from our seniors, Nandaji and entire team. Before I conclude, once again, I thank IASB team, Aarti ma'am and entire team, and Chairman sir and Vice Chairman sir and our Central Council member Nandaji and entire team for their unstinted support for this national conference hosted by Hyderabad Branch. I thank once again all, and over to Pankaj Kumar Trivedi, sir.
Thank you, Machal. I think before I invite our first Central Council member, Nandaji ji, I request you to kindly introduce the Nandaji.
Great, sir. Thank you. Thanks for the opportunity, Pankaj, sir. And friends, Nandaji Sharma ji is a Central Council member from Hyderabad. This is young and dynamic leader, and really Hyderabad is blessed to have such a wonderful leader from Hyderabad. And CA Nandaji Sharma ji is qualified in 2005, article with PwC. Thereafter, revived the Lakshmi Nivas & Co. Chartered Accountants firm from 1 member to 130 staff firm and contributed 100 plus chartered accountants in the fraternity. Their group is one of the kind to be called as Indian multinational firm or Make in India firm of chartered accountants. He has been covered a coffee table book and recognized as a Young India visionary by IMG Initiative Media Group in Kolab, UAE. At ICAI national and international forums, he took sessions and seminars, more than 23 plus topics. Friends, the role of Nandaji Sharma ji at the Institute of Chartered Accountants of India is currently chairman of Peer Review Board and chairman of Members and Student Service Directory M&SS, including SSP, Vice Chairman Digital Accounting and Assurance Board, and Vice Chairman Financial Reporting Review Board, Board Member Quality Review Board, Board Member XBRL, Member of Indian Directorate and Digital Transformation Process Reengineering Group, Chairman Center of Excellence Hyderabad, a member of multi-central committees and member from Hyderabad. With this brief introduction, I am presenting our Central Council member Nandaji Sharma ji for our audience. Thank you.
Thank you, my chairman from Hyderabad Branch, Macharao ji. Indeed, I'm thankful to you that Hyderabad Branch has actually taken that initiative to be with the Central Committee of Internal Audit, and I can say on behalf of entire Hyderabad, Telangana as such, my special thanks to Nandaji, who is like an elder brother to me in the council and been a great support in this last 2.5 years of my time with the council. A man who is always motivated and also scolded when we did something wrong. So that is the kind of vision with which he's actually been working. And all of us look at him with the kind of exposure. He's been there in the council for almost 4 times in past. And it's the fifth time where sir is with us. And, we don't feel like he's grown old. He's actually not old. His beard is white, but his heart is full of colors, if you see. And it is the pleasure with which we actually have him. Nanda sir, thank you very much for giving this opportunity to Hyderabad branch to host this VCM, or rather we will call it as national conference or whichever name you say, but knowledge sharing session is something which is very important. And under your chairmanship of IASB, you have been doing such a wonderful job. And during this pandemic, the number of people you have trained for the concurrent audit course is unimaginable. Your focus always has been on the SMPs on a continuous basis, and that continues with this topic also, hand-holding for SMPs. So, welcome to you, Nandaji, to Hyderabad and the Telangana State and Southern India Region Council also. And my special welcome to Mr. VGVS Sharma sir. Really a pleasure to have you from HCL Technologies, which we always hear. But having a person like you to have a first address will make a whole lot of difference. And it is a motivation which every one of us are going to focus. Samit, thank you very much for joining. It's a welcome from Hyderabad. All of us, look forward for your session as well. Pankaj bhai, I think we have been doing one of the most important part is every aspect was being covered except internal audit. And internal audit, Nandaji will agree. GST audit is gone. Maybe tax audit, I don't know. Statutory audit might come with an exemption. But the interest of the promoter is never going to go. And that is where the internal audit actually plays an important role. Internal audit today is taking a different shape. It is not only restricted to compliance verification or ticking job, but yes, it is decision-making participation, make or buy decision, or might be to do what is the next course of action. More importantly, I was associated with ITC and I have seen how the risk and mitigation of risk is something which we need to look into. Sharma sir, you will be one big example to actually agree to one fact. No one expected, Nanda sir, no one expected the risk of pandemic, right? But only one bank which have come across, which addressed that issue in their financial statement, which is no other bank than Jammu and Kashmir Bank. Just imagine. So the person who was sitting at that point in time to take take the decision from a risk, what is the impact which is going to be there? There they talked about lockdown approach, how they are going to run the business. And that is how that bank has always been in profit. That is the approach with which they have moved forward. So what is happening is the learning is not stopping with something, that is my experience. That is what maximum I can do. But the fact is, when you talk about risk and mitigation of risk, these are two important factors where every business, whether it is small business, Pankaj bhai, I think we have seen a lot of small entities actually vanishing during this period, right? Lot of firms might have reached Rajam also, saying that you give us some opportunity. How do we actually move forward? It is basically a risk and a mitigation of risk. That is where the role of an internal auditor is coming from. Today, the kind of approach, the kind of opportunity, the kind of vision which Internal Audit Standard Board is giving us is totally tremendous and different. And today we have all our standards which are already on a recommendatory mode. We are putting our fingers crossed that one day it will become mandatory. So the importance is going to come. Importance when you talk about Companies Act in 1956, they didn't had a section for internal audit. Whereas in 2013, a thrust has been put on internal audit also. So it is time that we need to understand what is the focus. It is no more a ticking job. Now the ticking job, it is clicking job, rather ticking from a point of count of a watch or a clock. That ticking is happening at a national, at a global level. And that is where we need to actually think about the topics which are being covered today and tomorrow are fantastic. One is introduction. There cannot be a better person than Sharma sir to give us. Second is Samit is going to talk about the planning on internal audit for small and medium enterprises. Thank you very much, Samit, because everyone thinks internal audit means large. No, it is applicable to a single transaction audit also, which is critical. Paul Jaker, sir, who's one of the most renowned person who's going to talk on the techniques for internal audit. Multiple techniques are being coming out. A lot of new tools and technology is being actually supported with. Then we have Deepika, who's going to talk on the IFC, which is the biggest opportunity even today. Sharma sir, Nandaji, you will agree. In ASB, we have talked about the IFC implementation for banking sector. Pankaj bhai, no one knew this. And to 2020 June, RBI has actually given a specific notification that all the banks have to actually implement IFC framework. So currently, my reading, it is my individual reading, which I'm thinking about, that the people are going to, if the bank audit is going to go, internal audit in a stronger manner in the form of concurrent audit is going to come. Then report writing, which is the most crucial thing. It's basically we do every job, but how to present it, might be some statistical data will make a whole lot of difference. And Amit is going to talk on the fraud. So the topics which are being covered, Machar sir, I think compliments to you, the kind of focus you have put in from Hyderabad, which is unbeatable. And the support which has been given by Aarti madam and all has been really cherished. And thank you very much to all of you to be part of this learning experience, which we are going to take you through for 2 days. It is going to be interesting and enlightening. Thank you all. Thank you very much for giving the opportunity. Over to you, Pankaj.
Thank you very much, Danyavas ji. Yes, what we used to call it as a ticking job, or basically sometimes coloring job of the books, is no longer going to be there, and definitely it is a job we have to do there. And yes, all of us are here to listen to Nandaji. But before I call upon Nandaji to speak, I feel privileged to get the opportunity to introduce the person of stature of CA, Charanjot Singh Nandaji. I'm also sad that I've been given only 2 minutes to do the introduction part about a person who is what Amitabh Bachchan is to Bollywood and Virat Kohli is to Indian cricket. While his proper brief introduction requires a minimum of 1 hour, I, respecting the time allotted to me, shall present the briefest of the brief introduction about Nandaji, who qualified as Chartered Accountant in 1991 and is presently serving as a Central Council member. And Nandaji was also a rank holder in intermediate exam. Nandaji also served in Central Council from 2004 to 2016. He is presently chairman of Interloid Standards Board and of Committee of Management Accounting of ICAI and vice chairman of the CPE committee and the member on board of 26 committees of the ICAI. In the last 2 decades, he has led and served in almost every important committee formed by ICAI. He was a member of NIRC for the period 98 to 2004, wherein he served as chairman in 2002-3. He is author of a book, A Practical Guide on Audit Documentation for Statutory Bank Branch Audit. He is the most sought after speaker in every part of India on subjects of both academic interest for members as well as students. He was Joint Secretary of Students' Union of MLN College during 86-87 and an active member of the debating team of D. Noble School and MLN College. He is known for giving his 200% to every activity he undertakes on behalf of ICAI, irrespective of the position, and is one of the most loved council member in ICAI. I present CA C.S. Nandaji to the august audience. Thank you. Nanda sir, over to you.
Thank you, Trivedi sir, for a very generous introduction. I don't deserve it, but I'm thankful you said the words for me. My very esteemed colleague in the council, C.A. Dayanivas Sharma. I love him, I respect him for the fact that he has been contributing to the cause of membership on a very large level. Leave aside people from bigger towns, he has been a crusader for people and members and students from Mofussil towns. I call him a technology man because he brought technology into the working of the institute. Today, we did not understand the pandemic. It was not risk for us because Dayanivas had earlier crafted the SSP and put it in the right perspective. And therefore, student and member all across the country, nothing was in turmoil, nothing was in confusion, nothing was in crossroads, everything was synchronized, focus in place. And I give the full credit to my younger brother, C.A. Dayanivas Sharma. A very ardent worker, late nights you can see him in the corridors of the council, working and putting all things in the right esteem. My very dear friend, the chairman of Hyderabad Branch, C.A. Macharao, very esteemed and respected C.A. V.G.V.S. Sharma ji, who was instrumental in drafting the internal standards for ICAI. My younger brother, Samit Saraf, a very dynamic chartered accountant who is always, there was a movie in which Amitabh Bachchan said that I sleep English, I dance English, I eat English. So Samit Saraf, you can always say that he drinks, eats, dances, plays, sleeps only internal audit. Madam C.A. Rajambal, C.A. Pankaj Trivedi, and all members who have come here to go enlighten. I'm so happy. Day before yesterday, we announced this program and we have more than 3,000 people who have logged in. This speaks of the passionate working of the Internal Standard Board coupled with the Hyderabad branch. Both of them are stars in their own perspective, and therefore people have faith and people have joined, thronged in such large numbers. This is our 4th conference in this week, and tomorrow again we'll have a conference, and day after Saturday is again our conference, which we shall be holding with the Saudi Arabia chapter of ICAI. Ladies and gentlemen, I want to tell you something before I make my presentation, my keynote address presentation. 3 things I would like to bring to your kind notice. You all are aware that we are an integral part of IFAC, International Federation of Accountants. And there are close to 150 more members of IFAC. But your institute, the Institute of Chartered Accountants of India, which was set up an Act of Parliament way back on 1st July 1949, even before the promulgation of the Constitution, we were the first to bring out the guidance on remote audit way back on 30th March 2020. This 1st July, when we finished 72 glorious years and entered into 73rd years of prospection, 2 important decisions transpired. Number 1, we allowed the MDP to happen. It was a gift given to us by the Ministry of Corporate Affairs. MDP now is in perspective. You can be partner with any company secretary, any advocate, any ICWA, any engineer, any MBA, any architect, a person who is a member of a regulated institution. Second thing, which I wanted to tell you, that in case if any student undergoing CA loses any of his parent, his total course fee is pardoned. A great initiative from ICAI, who is known for student-friendly and member-friendly activities. You all would be aware that CABF fund, where we are giving 1,50,000 to all people who are affected by COVID. And in case, unfortunately, if there is a death, we give 1,50,000 as ex gratia payment, and further 15,000 per month for 10 years. It is an institute which speaks of itself. It's an institute which is constituted of noble members across the country. People who have greater impetus, who want to resonate their best to the public at large. So, ladies and gentlemen, we also have a student benevolent fund which is in perspective. Not taking much of your time, I'll come to my keynote presentation. Give me a second so that I'm able to share my screen. Hold for a second, please. Is my screen visible, Ji? Should I start?
Yeah. Yes, sir. Yes.
Great. The coverage of today's two-day session. It starts with introduction to internal audit by none other than Mr. VGVS Sharma of HCL. Planning internal audit for small and medium enterprises. We have the learners faculty here, Mr. Samit Saraf. Then the next topic is techniques for internal audit, internal control and IS3 for SMEs, report writing and audit communication, and fraud identification and prevention. The first is introduction to internal audit. You are all aware that internal audit essentially carries a legal backing. Section 138 of the Companies Act 1956 mandates internal audit. A requirement in Companies Auditors Report 2020 again mandates the internal audit, which is compulsory. Clause 49 of the listing agreement with respect to audit committee's review of adequacy of internal audit. How important is internal audit? You see, the audit committee has to review the adequacy, whether it is adequately planned. Internal audit is in the right perspective, and requirement of internal audit of stockbrokers, clearing members on half-yearly basis, and requirement of quarterly internal audit of insurance. So these are the legally potent systems where you want internal audit. Now I'd like to briefly touch upon the standards on internal audit. Why do we need standards of internal audit? Because they aim to increase the overall quality, credibility, consistency and comparability of the work performed by the internal auditor. Internal audit is a sunrise area where the internal auditor burns the midnight oil to give assurance to the corporate world and other clients. I am reminded of a couplet which I would like to share with you. The couplet says, यूं ही नहीं होती जिंदगी में तब्दीलियां, यूं ही नहीं होती जिंदगी में तब्दीलियां, मोम को भी रोशन होने के लिए पिघलना पड़ता है. The English version is that life doesn't call for changes. Changes are not so easy. Even the candle has to burn to give light. So, ladies and gentlemen, standards on internal audit effectively create a robust benchmark. They undertake a mammoth task of revising and updating. Yes, the entire process in forms of standards on internal audit. And it has initiated the process of your board, has initiated the process of making the standards mandatory for certain classes of companies in a phased manner. On mandatory status, I would like to say that the council, after the authority of the council, we are very keen to go to the regulator to ensure that the standard on internal audit are made mandatory. And this proposal gains more relevance in the light of the fact that the Companies Act 2013 has definitely changed the way internal audit is positioned in corporate India. You are aware that apart from the mandatory requirement for certain classes of company, the Companies Act 2013 also wants and mandates the audit committee or board to formulate the scope, functioning, periodicity, and methodology for conducting the internal audit. We have also renumbered and reclassified the standards on internal audit. The key series are in 100 series, key concepts. The internal audit management standards are 200 series. Conduct of audit assignment is 300 to 400 series. Specialized area is 500 series. Quality control initiatives 600 series. And miscellaneous matters is 700 series. Now, session 2, planning internal audit for small and medium enterprise. You're aware that the purpose of conducting internal audit is very clear. Apart from legal requirement, which I discussed, internal audit also encompasses an internal audit plan, because the entire entity needs to be prepared for a given period of time, and the report has to be presented to the highest body responsible for internal audits. A number of internal audit plans are prepared for individual assignments to be undertaken, covering some part of the entity and presented to the CIA, the Chief Internal Auditor. What are the key elements of audit planning? Undertake prior to the beginning of the plan period. Everything is planned. There is a saying which says, people never plan to fail. They generally fail to plan. Second, comprehensive, covering all issues that may arise, all steps that may arise. Directional in nature, because it contains, considers, and comments on the auditable units. It is normally prepared by the Chief Internal Auditor, and the outcome of the entire exercise is overall internal audit plan. The third session is techniques for internal audit. Now, technology, you are aware technology has changed the entire world. When you speak of technology, you may speak of blockchain, you may speak of artificial intelligence, you may speak of robotics, you may speak of Internet of Things, you may speak of cloud computing. All these techniques are used by the effective conduct of internal audit by the internal auditor. You are aware that the demand for data analytics is growing as regulators call for organizations to use analytics and bring out exception reporting so that a comment can be made on something which is not in the right process. They want that by the knowledge of data analytics, the internal audits knowledge, the internal audits range also expands. They're able to find out areas which were earlier concealed. No sampling is required and 100% checking can be done. Implement protocols that govern the extraction of data used during audit processes so that the data does not go to unholy hands. Increase the use of continuous auditing and monitoring, continuous audit and thereafter monitoring, and then budget and resource constraints. Now, why do you want leveraging technology in internal audit? Number one, the coverage of internal audit is largely enhanced. Therefore, you are not subject to reporting on samples. Enabling continuous audit. Yes, technology helps you to do continuous audit. And I want to tell you that certain banks are now doing concurrent audit based on technology also, and largely driving processes and activities efficiently, which is very, very important. What are the techniques for internal audit? Machine learning techniques, which enables enhanced view of large data sets and improved risk analysis. When it comes to risk, we have to identify the risk. We have to identify the risk appetite of the management. I met a person some days back. He said, Mr. Nanda, could you suggest me an area where there is no risk, any business, there is no risk? I simply smiled and said, my boy, if there is no risk, there is no opportunity. No risk, no remuneration. No risk, no reward. So risk has to remain, but we have to see that it is mitigated and one has not to go overboard on the risk initiative. Predictive modeling. How you anticipate the areas of risk, you predict. And last is natural language processing, which is classifying and analyzing large volumes of unstructured data so that you can draw inference from them. Now, leveraging technology in internal audit, process mining, robotic process automation. In process mining, you give and deliver data-driven automation and assessments of the control design so that the control weaknesses can be identified. And robotic process automation means preparation, extraction of data, and ensuring that various processes and activities are included so that there is a foolproof assurance that nothing has been left. Session 4 is on internal control, and IFC for SMP, SMs, small and medium practitioners. Now, why internal control is relevant? Section 134(5)(e) says, overall responsibility lies with the board of directors with regard to the internal financial controls. It says that directors in the case of a listed company have to lay down internal financial controls to be followed by the company, and that internal financial controls are adequate and are operating effectively. Adequacy and effectiveness is very, very important. Rule 858 of the Companies Accounts Rules 2014 says that the board of directors report should include the details and respect of adequacy of internal financial controls with reference to the financial statements. The adequacy and effectiveness are two keywords. Section 143(3)(1), which very rightly states that the statutory auditor has to report on whether the company has adequate internal audit control system in place and operating effectiveness of such controls. What are the responsibilities of the internal auditor? He has to test the design, implementation, and operative effectiveness of internal controls. I would like to very candidly put that no chain can be strongest than its weakest point. So when it comes to process controls, everything needs to be tested. A risk assessment based scoping, independent opinion, you are aware as per SIA 110. And in case of statutory auditors intend to rely on the internal auditors with regard to CFR, the documentation of the scoping and understanding, so that the internal auditor is able to rely on the work which is done by the statutory audit is able to rely on the work which is done by the internal auditor. The section 5 is very important for SMPs, which is the report writing and audit communication. Now, tone of interaction. First of all, you need to understand the empathy towards the auditees and understand their challenges. Very, very important, because internal audit as the third line of defense is an easier way of identification of issues, and it has no other operational responsibility than identifying issues, taking to the management and ensuring that they are redressed in the timely fashion. The focus on process and improvement, not on people. If the processes are fine, people would be able to work on that. You can't work on people generally. You have to specifically work on people, but you need to ultimately go ahead and see that the processes are there. There is no reoccurrences of issues which may be fatal for the organization. The processes have to be strong. Now, internal audit report, documentation of the issue, your observations, the management's response to them, what is the root cause of those observations, recommendation, action plan with timeline in which it has to be complied with, risk rating, very, very important. You can write high, medium, low, risk categorization, strategic, operational, financial reporting and compliance, and root cause categorization, very important. Strategy, structure, process, technology. Second, the scope limitation to be called out. Scope limitations are very important because it is something which is mandated by the internal auditor, has to report either to the audit committee or to the board as the case may be. Therefore, what is the agreed scope of work? Very important. Information not received may also be called as scope limitation because we may issue limited assurance in such cases. Standard on internal audit 110, nature of assurance. I told you that this speaks on the following two issues. When you conduct an assignment, you either give a reasonable assurance assignment, or if you don't get proper documents or response, you give limited assurance assignment. Section 6 and the last session is on fraud identification and prevention. The role of internal auditors in identifying frauds. They have to first of all determine the areas which are prone to fraud. Then they need to assist in designing new controls to prevent frauds. The frauds may come from anywhere, but you need to have a system which is totally synchronized to detect and mitigate the frauds. Detecting existing frauds and suggesting the corrective actions so that they are not seen reoccurring. Testing existing controls and suggesting actions to fill gaps which may allow a perpetrator to conduct fraud, to think of doing a fraud within the organization. So, ladies and gentlemen, I have done with my presentation, and I want to tell you all that you could all go ahead and take a call on how to inculcate the best practices of internal audit in your life. Internal audit, being a sunrise industry, is warranted all across the globe. And we Indian Chartered Accountants, you are aware this pandemic had put number of things out of gear. I would just quote the words of Mr. Dayanivas Sharma, who said that GST audit has gone and statutory audit is also of banks is also on the radar. And you are aware that the tax audits, the limits have been going off consistently, not 10 lakh rupees, 10 crore rupees if you are not drawing cash. So these all areas would ultimately be put in a shell. But the internal audit will grow. So internal audit, technology, outsourcing, these are the new areas of practice where a paradigm shift is expected of small and medium practitioners. Not taking much of your time, I would like to thank the Hyderabad branch for inviting us to give the keynote address. I want to thank my brother Dayanivas Sharma, the man behind this entire show, who through his total working, he used to give calls incessantly to ensure that this program goes on well. I'm thankful to Mr. Pankaj Trivedi, who represents the Hyderabad branch. Two of my speakers with whom I spoke personally and they immediately agreed, Mr. VGVS Sharma. He said, Mr. Nanda, I would be more than happy to do the program. And let me tell you, Mr. Dayanivas, Mr. Sharma also is in Hyderabad. So if it had been a physical program, it would be nice that he could have come and spoken in physical form. And Samit Saraf, who in spite of his busy schedule said, sir, no, when it is a question of inter-audit standard board, I'm always available. So I want to thank you all profusely and wish this conference a great success. Let us hold more such conferences so that we move in the right direction. And thank you, Madam Rajambal. It is great to see you here. Thank you. Thank you so much. Bye-bye.
Thank you, sir, for giving a wonderful opportunity for another. Thank you, sir.
Thank you, Nandaji and Dayanivas Sharma-ji for setting up the tone for internal audit. And I'm sure today and tomorrow would be a memorable day in the lives of many of the chartered accountants who have joined today. And I'm sure that there would be a great learning we would be carrying on in the years to come. So without wasting much time, Nanda sir, if you permit me, we will start the sessions.
Yes, please, sir. Please go ahead.
Thank you very much. Friends, it is a time to start the first session where VGVS Sharma ji would be talking on introduction to internal audit. And again, let me take the privilege of introduce Sri VGVS Sharma ji, who is currently working with HCL Technologies Limited since January 2011 as Head Internal Audit and Risk Management. VGVS, as he is generally addressed within the industry, is a cost accountant and a BCom honors graduate with more than 3 decades of experience in governance, risk and compliance, forensics, and advisory areas across various industries. Some of the organizations that VGVS has worked for include Tata Timken, Godrej GE, Escatel, Aircel, HCL, and Deloitte. His industry experience span manufacturing, telecom, consulting, IT, retail, and travel. His technical expertise includes internal audits and process reengineering, advisory, SOX, revenue assurance, risk management, designing and implementing governance frameworks. He has been heading the internal audit risk and compliance function for the past 21 years. He is a speaker at various forums on fraud, process control, SOX, etc. He is credited with formalizing assurance function in the telecom. I present here with Sri VGVS Sharma ji. Thank you.
Thank you so much. Thanks a lot.
Over to you, sir. The screen is all yours.
Yeah. Thank you so much.
I can't say the stage is yours, but the screen is yours.
Thank you so much, Pankaj ji. It truly is a pleasure and an honor to be here on this panel. And I see this as a privilege for me to share what little that I've learned over 32 years of handling various facets of internal audit, forensics, risk management, enterprise risk management, and I have implemented enterprise risk management framework various organizations that I've worked with. So thank you so much. In fact, Nandaji had made my life that much more easier by actually covering a lot of stuff that I plan to speak about today. So what I would probably do due to the time constraint, I'll share whatever practical things that I need to share as we progress. One second, I think. Yeah, am I audible?
Yes, sir, you're audible and the screen is also perfect now. Yeah,
Okay,
go ahead.
great. Yeah. So we'll start with definition of internal audit. What actually is internal audit? Because I've seen internal audit as a profession, as a function change during the last 3 decades. And then initially it was a management function where it was reporting to the management, set up by the management. But then as governance started strengthening, internal audit started playing a more decisive role. And then now it's functionally reports to the audit committee, and it's a board appointment, a board of directors appointment. That in itself shows the importance of internal audit in the present days. Now, what actually is internal audit? As per the ICAI, internal audit is an independent assurance. It provides an independent assurance on the effectiveness of internal controls and risk management process that Nandaji just spoke about. What is the purpose of it? The fundamental reason for this is to enhance the governance. Now, to be able to build that trust and reliability, it's important that an independent function like internal audit provide an assurance on the effectiveness of either the internal controls or the risk management processes. Now, why risk management has taken over big time in recent times? We have seen that from controls checking, now it has become more risk oriented. We have seen the gradual shift from controls to risk during the last 3 decades. Now, why is that? The fundamental reason is that when the board of directors actually they are responsible to the shareholders effectively, and they actually hold the fiduciary relationship, and they manage shareholder funds, and therefore it is also the responsibility of the board of directors to share with the shareholders what are the risks that the organization is affected by, and how the organization is actually managing these risks. And therefore, this has become more of, I would say, a reporting kind of a thing. So that, what was happening generally in the past is that you would only share how the company is going to grow, what would be the increase in the top line or the bottom line or the expansion, either it could be the market footprint or product diversification. What was missing was that what are the various risks that the organization would be encountering during this journey. So to fill that gap, they brought in this concept of risk management, and therefore they also said that, okay, I think it's also important for the organization to evaluate on an ongoing basis how these risks are being addressed and mitigated by the organization and provide an update to the board. Now, either the internal auditor can do it, or you may have a chief risk officer who might probably do this. Now, what does the ICAI say? Pretty much the same thing, except that they have also included consulting activity over and above the assurance piece. Otherwise, pretty much the sum and substance of the internal audit is exactly the same. Now, what are the basic principles of internal audit? Now, these are the basic tenets on which internal audit is actually built. First is independence. The function has to be independent to be able to provide an independent assurance to the board and the management. It has to be very, very objective, which means it should not carry a sense of bias and then report. Adequate professional care is extremely important, which means that every evidence will have to be looked at, and everything should be based on the documentary evidence that is available. You do not actually report something based on hearsay or based on your judgment. Confidentiality is extremely critical. Whatever that you report has to stay with the function and the reader of the report. It should not be discussed on coffee tables. Now, skills and competence. Now, skills and competency and professional care go together. They are hand in glove. You need to have requisite skills and competency to be able to audit a particular area. Now, for example, in the present day situation, you will see a lot of these technology related audits being carried out because pretty much everything happens using technology. Therefore, it's absolutely important for internal auditors to have good knowledge of technology or at least the basic fundamental idea on which various processes actually work. Risk-based audit. We just spoke about why risk has become so very relevant and important today, because what auditor will have to do, he will have to identify all the risks that the businesses are exposed to, and then include them in the audit plan to see how these risks are being mitigated so as to ensure that the organizational objectives are all getting realized. Systems and process focused. Now, this is an extremely, I would say, neglected area. I've seen a lot of auditors report findings purely as a finding or an observation. What is very important is that what has actually gone wrong, whether it is a process failure, whether it is fixable, or whether it is deliberate. How can we fix it? Either use of technology or whether you need to keep the process is extremely important. Next comes positioning of the internal auditor. Now, if you want a place at the table, then you need to be part of the decision-making process, which means that either the management or the board should be able to invite you and seek your opinion on certain decisions. And therefore, it enhances the value of internal audit. Next is, the last point is also extremely important, sensitive to multiple stakeholder interests. Now, you say the dichotomy here. The audit committee is more interested on governance, on effectiveness of controls, and operating effectiveness and test of design, both. Whereas the management is more interested in cost savings and how do you build, increase the efficiency. So how do you balance these both? At the same time, management would be more interested in assigning a lot of advisory kind of work to internal auditor, because he's probably best placed in the organization to be able to objectively look at a problem and then come up with very practical solutions. So how do you balance the both without getting your thoughts colored or without getting biased is extremely important. Quality and continuous improvement is something, as times change, I think there is a need for constant improvement to stay relevant. Against this background, it's also equally important. How do you make sure that whatever processes, whatever methodologies that you've implemented are actually being complied with? And then you need to also make sure how do you improve upon them to bake in some of the global best practices that you can actually implement. Now, this is against the backdrop of what the Council of ICAI has actually proposed as part of the new standards. Now, these would actually come into effect. I'm not saying these do not exist today, but these would be formalized and will be made mandatory, as Nandaji said, at a time when the notification will be made out. Now, what are internal audit standards and why do we need them? It's like broadly saying putting method to madness. So you need to have a unified process across the board for multiple reasons. Either you want to compare the audit reports of one organization with the other within the same industry. At the same time, how do you measure an audit or an audit performance is also equally important. Now, so you lay down certain parameters, certain standards, and certain framework against which you try to actually compare. Make sure that you have a standard process in place like any other operational activity. You also have a laid down process which is standardized, which is documented, on which the auditor is supposed to report in case if there is any non-compliance. And these would also go through, as part of your quality assessment, the external assessor would also come and have a look at the level of compliance to these standards. Now, as you're all aware, Section 138 of the Companies Act, the board can appoint any person as an internal auditor. Now, what the standards, what the council is recommending is that they would make it mandatory, at least for the members of the institute who would be conducting internal audits to start with. And it's also recommendatory for non-members to adopt these standards. And it's always good because you always had something, that you can use to tone up your function and an organization and have a unified or a standard process across the board if you do not have one. Last one is internal auditors shall apply the best professional judgment. We also spoke about it. A lot of times you see shades of gray. It's not a mathematical equation like 1 + 1 is equal to 2, or it's a binary decision. You will have a lot of shades of gray where you will have to consider multiple factors, and you will face this as an internal auditor all the time. And you will have to take the judgmental call, especially when you want to rate, when you want to form an opinion, and then how do you want to rate or categorize any non-compliance that you would come across as part of your audit. So you would use a certain degree of professional judgment, but then it should be free from bias, but then you should be professionally qualified to be able to justify the decision that you have taken. Okay. What are internal audit standards? We are just continuing with it. Now, as I've already mentioned, these would become mandatory in a phased manner from such date that that would be notified by the council. And then these standards would supersede all the earlier standards that we had that have been published by the institute in the past. We've covered this area, so I'm just skipping these slides due to paucity of time. Okay, now, as Nandaji already mentioned, that standards provides the framework or a methodology for carrying out value-added internal audit services. I'm using the value-added internal audit services specifically because internal audit is not just seen as a policeman doing the validation process. And that's how it actually began at one point in time. Today, it takes over the role as a trusted advisor, honestly. And the management and the board a lot of times come back to you and ask you to carry out certain work to help them take certain decisions. And this actually happens, trust me. And therefore, these are all seen as value-added services and no more tick the box kind of an activity. So now, why these are important? We said very clearly that it would bring in standardization. What are the various kinds of framework? What are the various components of the framework that we're talking? Code of ethics is extremely important. Typically, as a practice, what happens is that every internal auditor is supposed to sign a code of ethics, standardized format in terms of that he would not disclose, he would maintain confidentiality, all the multiple clauses that are actually involved, and he actually signs. Because in the present day world of insider trading, you would have access to unlimited information, sensitive, confidential, and highly proprietary information of an organization. And therefore, it's paramount for the internal auditor to follow strict code of ethics. And this becomes extremely important. This is one of the pillars of the framework. Then the framework that has been rolled out by the institute also talks about, provides definitions we'll talk about it, to various internal audit terms. Then the other key pillars of the framework include basic principles that we just talked about in the earlier slide, key concepts that we are going to talk about in the subsequent slides, standards, and the guidance. So together they form part of the framework. And any internal auditor, practicing internal audit or member of the council will have to definitely go through these in detail, including the preface to these standards, to be able to thoroughly understand the expectations from these standards and the objectives of internal audit. Now let's look at what we are going to study today. If you look at the box, we're going to talk only about the standards relevant to internal audit, which would typically cover between 100 to 400 series. Now, the 100 series talks about the key concepts that we just discussed in the earlier slide. The 200 series talks about standards on internal audit management. How do you manage the function, which is so very paramount in ensuring that you discharge your duties and responsibilities as a responsible auditor. Then the 300 to 400 series talks about conducting audit assignments. How do you conduct an audit? And how do you take it to your logical closure, right? From the planning stage till the time you issue the final report. And of course, the 500 series, which we're not covering now, is standard on specialized areas. 600 talks about quality control, which is somebody will have, an external assessor would do an assessment as to the quality of compliance of the internal audit function to the adopted standards. And then 700 is about miscellaneous matters. Now, let's talk about the first standard, which is the 100 series and 110, nature of assurance. Now, internal audit primary responsibility is to provide an assurance to the board. That's the fundamental role. But then the add-on role, which has now slowly becoming prominent, is the advisory role. Now, an internal audit assurance refers to an assignment in which the internal auditor expresses an opinion. So what we are talking about is an opinion-based audit reports. You currently see there are a lot of internal audit organizations which do not give an explicit opinion on the area audited. But what the council is recommending in the amended standards is that an opinion should be provided on every audit report wherever feasible. And those reports where an opinion is explicitly provided, it's called an reasonable assurance assignment. That's the category in which it is being defined. Now, how do you provide an opinion? You define certain parameters on which you try to compare. Now, typically the parameters could be, the materiality could be one, or the impact of risk could be one, that if a particular event were to happen, then, for example, the frauds. So you might actually come across a very small big amount of fraud, but then you don't apply the materiality factor. The fraud in itself is a problem because it's a time bomb. So it may explode any time in the future. So whether it's a potential fraud risk or it's a potential vulnerability threat when you're talking from the technology terms. So you will have to do that assessment and you would lay down the criteria very clearly. For example, business continuity. What would happen if the business continuity, if the systems do not come up within a certain time frame? And then how do you rank the risk? So you will define that if it doesn't come up within 3 hours or 3 days, depending upon whatever that you want to define based on the risk appetite of the organization and which the board would sign off, you would actually risk rank them. So you would define a criteria based on, or maybe loss of reputation is another example, right? So you would have multiple criteria depending upon the area that you audit. And then you apply the criteria to be able to risk rank them. And then when you finally issue an opinion, you actually collate all these risk ranking and then take a judgmental opinion to say that, okay, whether you want to say that the design and operating effectiveness is good, bad, ugly, or needs improvement, whatever the criteria that you want to assign. Now, where you do not issue an opinion based, then it becomes a limited assurance assignment that Nandaji also just spoke about. Now, let's look at exclusions. What typically do not fall within the ambit of an internal audit assurance. Now, these typically would include due diligence, or the board or the management might want to do a quick work on a particular area and say that, can you give me a limited opinion? So it's not a full-fledged opinion, but they would say that I wanted to look at how are we doing on the sundry debtors or the collections. So you would do a quick check and then you revert back and tell the management, okay, this is what you feel, what is working well, what is not working well, and why it is not working well, and what can be done to fix it. So this becomes a very limited thing. It's not an opinion formally that you would give. The other classical area is on the compliances. Even though you do a root cause analysis to find out as to why a particular compliance is not being met, but still you don't give an opinion as such. You would only say it's a binary thing, whether you comply or you do not comply, kind of an engagement that you typically carry out. So these are some of the due diligence is another classical example. Due diligence, you do not actually give an opinion. It's again a binary kind of a thing in terms of whether a particular thing is being complied and non-complied, and that's how you report. So, so these are some of the exclusions. These are very generic, just to give you an idea in terms of what are typically excluded from an assurance kind of an engagement. Now, let's look at the next standard, which is the 200 series. Now, how do you manage the function? Now, this is a very, very broad area in terms of how do you want to position the function? How do you want to define the deliverables? What are the kind of delivery models that you want to follow? Whether you follow an outsource model, in-house, co-source. There are multiple models available where you might want to source, a staff augmentation, as we call it. You hire hands and feet from some empaneled firms, and then get the job done, and then release them. So the multiple models available in terms of how you really want to run this function. Again, that requires a bit of experience and thorough understanding of the organization, and of course the buy-in from the audit committee and the management. So you will have to definitely have to decide in terms of how do you want to manage this function. Then comes your budgets, then your training, then finalizing the audit methodology, the kind of tools and applications that you want to implement, the kind of people that you want to have, the kind of skills and competencies that you want to build, or whether you want to source or whether you want to outsource, all of that. Then continuous monitoring is another important factor. So we typically have the center of excellence kind of verticals within the function, whose job is nothing but to continuously monitor, like the quality assessment kind of a framework, where they, on ongoing basis, every audit is validated or against a particular predefined checklist in terms of right from the planning till the report release, which would typically include the planning, what is the kind of risk assessments that you have carried out, what risks that you have factored in, then the basis of collating these risks, whether we have missed out on anything, then the risk assessment methodology itself, then comes your scoping. You start with the largest scope, then you zero down and narrow the scope and say that this is exactly what you want to do. And then offshoots, what happens is that when you pick up an engagement, your scope is initially limited, but then when you start hitting the ground, suddenly you realize that there are areas which you feel are equally critical, but then you should not get digressed, so that you remain focused on the area that you want to audit, but then you want to make sure that you don't leave these things unattended. Some of these other issues which keep cropping up will definitely require a little more investigation than a cursory look. So you make a note of that and then see that how do you include it in the subsequent audit plan, all of that. So broadly, what you effectively do is that how do you want to manage and run this function? How do you document it so that there is some method to madness? It is systematic, it is disciplined, so that every auditor who performs the job does exactly what the individual is supposed to do. In fact, I was told long back by one of the gentlemen who said that even a medical practitioner enters a bank, he becomes a banker. It's so very regimented and regulated that you cannot, there's absolutely no legroom or leeway for you to deviate from a predefined process. It's like what should I say, a manufacturing line in a manufacturing plant. So you cannot change anything. It keeps on moving on a conveyor, and then the next processor takes over the job. So that's how regimental it has to be to ensure consistency and to make sure that requisite quality is derived. And therefore, to enable all of this, you have the standards which have been documented now and which are being released by the council and to be made mandatory. So now, as we discussed, I think you need to have a very well documented internal audit process. We typically call it as an internal audit manual, which has your ICAI methodology. You have a very clearly defined charter which tells you what the internal audit objectives are, what your authorities are, what your rights are. But these are all signed. Our internal audit charter is signed by the board, which is the delegation of authority given to the internal auditor for free access to information, records, registers, documents, and information. And so you should not, as Nandaji earlier said, that if there is a scope limitation, you definitely will have to call it out very clearly in your report to say that you are unable to comment, or your opinion is colored or limited by a non-availability of access or information or clarification, because you would at times, you come across certain auditees, who are not very forthcoming in terms of sharing the information or providing clarifications. Then comes your resourcing. We talked about resourcing in terms of the core sourcing, in-sourcing kind of skills, and review monitoring is also something that we have spoken about. And quality evaluation, whether you want to do it every year, 6 months, or an ongoing basis, is something, that you might want to agree with the audit committee and the board, depending upon the maturity of the organization, maturity of the function. And then you might want to then improve upon it gradually when you see that the processes are streamlined. This becomes all the more challenging in the present situation where the attrition rates are very, very high. So whenever a new individual joins the function, again he has to go through the training, then, or he has to shadow somebody to make sure that he quickly understands the organizational processes, because the processes, if they're not standardized the way they are being rolled out now, what would happen is that every organization would have their own ways of running a function, or they would have probably their own documentation methodologies or audit methodology or the sampling methodology, which will create a problem tomorrow. And therefore, these standards and the framework would definitely help to bridge that gap and to bring in a certain level of standardization. Now, overall internal audit planning. Now, what it talks about is the annual audit planning process. Now, it could be an annual plan or maybe a 3-year plan. So there are a lot of companies which follow different processes. Now, if it is if a very highly mature company, you might have a 3-year rolling plan. But any plan, whether it's a 3-year or an annual audit plan, has to be a rolling plan. It cannot be something which has been cast in stone, which means that now every plan will have to undergo a review to evaluate its relevance at that particular point in time. It could be a month, it could be quarter, it could be year, depending upon what has been agreed with the management and the board, and say that, okay, whether the plan is still relevant or whether new issues or new threats have actually come up, which requires greater attention, because all said and done, internal audit resources are limited. And then how best you want to deploy these resources and where they need to be, where you need to deploy these resources is the biggest task of the internal audit head or the chief internal auditor. So I think he or she has to be completely aware in terms of where the risks lie, which would have greater impact, or what happens most times is that that a particular risk is evolving or emanating, but you're not aware of its impact or the kind of damage it can do. And so you might want to spend a little more time on that particular nature of risk to see that, okay, what are the kind of threats it might pose, and what kind of mitigation actions do we have. And more than that, I think what is missing today, somebody spoke about frauds. The biggest reason why we have frauds today is that we have very weak detective controls. There was a time, when I started in audit, the detective controls used to be extremely strong. You call these bank reconciliations or physical cash verification. I'm giving you some of these layman examples, that you can easily correlate. Now, these were all detective, right? Now, preventive is where we started focusing when technology started taking over some of these processes, and the detective controls have significantly gone down or watered down, because of which what is happening today, when a fraud happens today, you detect it after 1 or 2 years. By the time, I think all the damage has already been done. And that is the biggest problem today, because typically a fraudster, what he does is that he doesn't siphon off $1 million overnight. What would happen is that he would carry out dry runs to see whether it is getting detected or not, and then there'll be one big bang, and then $1 million are gone overnight. So that typically what happens. He does Reiki, he does all kinds of things to see that whether somebody is monitoring or noticing. So internal audit planning requires talking to multiple stakeholders, collating information, making sure multiple stakeholders could be your external auditors, your external partners. Like, for example, you would have engaged the lawyers for some of your legal related work, or tax experts, or your stat auditors, and then of course the management, various functional heads within the management. then your stat auditors, then your internal audit partners, because you would have actually had a co-sourcing or in a outsourcing arrangement. So you might want to talk to them and see which way the industry is moving, what are the newer emerging threats that or the vulnerabilities that they are actually foreseeing within the industry, or there could be certain common threats which could be even outside the industry as well. So I think it's an amalgamation of a lot of things, plus your own risk assessment in terms of you can again have multiple parameters for assessing the risks at the process level. Now, it could be your collection process, it could be your marketing process, it could be your financial reporting process to see that your fraud risks and then your operational risks. Nowadays, for example, operational risks could be something like whether the process is heavily manual in nature, or you see a lot of attrition happening in the particular function, or a new function has been created, or a new application or a system has been implemented. So these are all the things that you might want to factor and then say that, okay, whether this would pose a much bigger risk to that particular process. And then you might want to include it or assess it. So I think that you can include, add as many parameters as you want, and then that's what we typically call as a risk-based audit. And of course, these are all aligned with your organizational objectives. So we need to be very clear in terms of when you want to evaluate the mitigation action against a particular risk, how that risks actually impact achieving the organizational objective. Now, this objective could be achieving your top line numbers, bottom line numbers, cost reduction, increasing your market share, or your new rollout products, or technology redundancy, or technology innovation. It could be any of these, because when you put together certain numbers, financial numbers, there are a lot of assumptions that you take, basis which the numbers are getting generated and that you publish to the shareholders. But then you also need to understand, or rather you need to explain to the shareholders in terms of, okay, while you think these are the numbers that you would achieve as part of your 3-year rolling plan or annual plan, but then these are the potential risks which can hamper. And then you also need to mention what the mitigating risks are. If you look at the US listing, typically Form 20 would have a very detailed section. In India, I don't see so much happening, but in the US, if you look at the risk management section, it is extremely detailed, and they would mention, and you'll see a lot of analysts actually reading these and then questioning at the AGM, saying that you said that you are getting into a particular product line, but this product line has already formed in another company within the same industry. Why do you think you would be successful, right? Things like that. So what I said, probably I think is a very long answer to this short question, but it's extremely important that you understand the business, you understand the organization and its processes, the industry, the risks that the organization is exposed to before you prepare this plan. And it's typically a rolling plan. Now, this plan has to be reviewed both by the management and the audit committee before the audit committee finally signs off, and then that becomes the plan. And then every quarter you review the plan and go back to the committee to say that either you want to include additional areas or you want to drop some of the areas that we initially thought are relevant but may not be relevant today. So those are the things that you would actually keep factoring as you progress while executing the plan. So I think pretty much this would encompass whatever that I've just said, the plan, the organization of the assessing risks and all that, socializing, because whenever you prepare the proposed draft audit plan, then you share it with all the stakeholders with whom you have interacted, sort inputs and opinions and say that, okay, this is what I have planned. What do you think? Am I missing something? Or it's always a collaborative effort. So, and use your network to make sure that you're not missing out on something which is very critical to that you should ideally be auditing. Okay, so we move to the next one, which is okay, we're continuing with this. So professional judgment, as I mentioned again, there's nothing binary here. So you actually take that final call as the chief audit executive, because you become accountable and responsible, and you sign on the dotted line that this is what I feel is the area that I should be covering. And as I mentioned, I think you need to have thorough understanding of the business, the industry, the processes, and the past reports, the kind of issues that have actually cropped up, and how the processes have been automated, and some could be even manual, all of that. So I think you prepare the audit plan based on this. Audit universe again is something which is old fashioned, because audit universe used to be, you would have 40 line items, then you probably add on the 20, it would become 60, then you keep doing it over a 3-year period. But all of that has become redundant as we speak. It has purely now become risk-based. Whatever is an emerging risk is where you focus, and you don't care much about your history or the audit universe. But then you do not want to lose track. Audit universe is more like a reference today, that okay, these are all, this is my laundry list, and I hope I'm not missing out anything. Because typically some of the things that you might want to do on an ongoing basis, some you rely on an exception basis, like Nandaji talked about continuous monitoring or auditing by exception, and then use of technology now. So use of technology again has its own challenges, because when you use technology, when you do data analytics, one of the key elements that I see missing is that we do not validate the data integrity. I think that's the biggest problem that I see today. Some of the audits that we have done in the past, we did come up with a lot of surprises. So I think what is very, very critical when you use data analytics, when you use technology, is to validate the data integrity and make sure that you are actually validating the data that makes sense. Otherwise, what would happen when you pick up a year or two's data, then maybe the initial 6 months or could be some junk, and then you end up using that junk, and then you might end up drawing your own sampling. But then that may not be correct. At the same time, the data analysis that you do may not actually give you the right picture. So which is very important. But what is important is to validate the data integrity right from the time that you want to pick the data, whether the processes have undergone the change, whether the system configurations have undergone the change, whether the users have undergone the change. All of that will need to be looked at and then validated before we start actually using that data for analytical purposes. Then we talked about resource allocation and planning in terms of whether it's in-source, outsource. Again, it's more repetitive. Now, objectives of internal audit. Now, we need to understand what would be the outcome of internal audit. What is expected of me? What is expected of this function, both in short term and long term? I think that gets captured as part of your audit charter, which very clearly defines what your role is, what your responsibilities are, what your authority is, and also defines very clearly what your quality assessment program that you need to document very clearly. Then whether you want to include some of these specific things like related party that Nandaji just spoke about. So whether you want to include it as part of your the audit universe, or what is the frequency that you might want to audit. So some of these are very, very clearly captured in the internal audit charter, and therefore the objectives become these become the objectives of the function together, and this will also in a way flow into your KRA, which then gets rolled down to the individual to the individual team members within the function. So the chief internal auditor's KRA typically will flow from the audit charter. Apart from, of course, you would have some of these quantitative and qualitative parameters. Quantitative would be number of audits that you have completed, and then a number of audit recommendations that you have closed, all of that. So you'll have quantitative. Qualitative will be your number of high-risk findings that you identified, the savings piece, wherever, because some audit committees do not recommend big savings number, because then what happens is that you move more in identifying the efficiencies rather than focusing on the assurance piece. Audit committees are extremely wary when internal auditors veer more towards the advisory and efficiency related audits. So they want to make sure that their assurance areas are highly focused. So some of these qualitative and quantitative number of trainings and number of certifications that you got for the team, skill enhancement, all of that. So you will have qualitative, quantitative, and then resource training. So all of that would also flow into your KRAs. Now, the engagement letter is wherever you actually engage an external consultant or an SME, then you lay down very clearly what is the expected outcome of a particular audit, what is it that you as a client is expecting from that SME on the engagement that he or she, the firm would be managing on behalf of the organization. So I think then the objectives are very clearly defined in terms of the SLAs, what exactly, the assurance, whether it has to be binary. But typically what happens, when you look at an audit report issued by an external firm, no offense meant, but then you'd see more than the size of the report, the size of the caveats that they include, that I'm not responsible for this, I'm not responsible for that, this report cannot be used here, that report cannot be shared. And finally, the reader, when he reads it, would realize that, what am I reading? If everything is a caveat, if you have disclaimers everywhere, then I think it becomes a problem. So I think you need to make sure that your objectives are very clearly defined. You make sure that the report can be used to provide an assurance to the reader and to the management or to the board or to any management team member. So I think that has to be very clearly laid out and make sure that, the report doesn't contain too many caveats so that, that report itself will become not very useful. Next, we move on to the next section, using of an expert we just spoke about. So what is very important is that to validate the credentials of an external experts, because most times, you'll have bunch of experts all over. What is very important is that how do you actually do a ref check of these, whether somebody has actually engaged, what are the kind of, because some expert could be good in a certain area, but the other expert may not be as good as the same individual, even though he may carry the same qualifications or experience, but the expertise could be in a certain area. Now, so typically, I'll tell you, cyber could be an area. So cyber, there are multiple areas within cyber. Not everybody would deal with every aspect of cyber, and certain frameworks that some use. But there are certain people who actually use a completely different approach and a methodology, which is highly unconventional but highly effective. So what you have to do is that you need to spend a lot of time with these experts to understand what is the approach, what is the methodology, how different is this expert from the other expert, and what value addition that he or she is going to bring to the table, and be a differentiator when you engage that expert. And then you also will have to do a lot of ref check to see that, whether somebody has engaged, and then you might want to talk to those individuals to see that what assignments have been given, whether the client was happy with the outcome of that engagement. I think that becomes very important. And the second important thing is that how do you very clearly communicate the scope? Because most times what happens is that you have an open-ended scope. You don't define the boundaries of the work that you're assigning to an external expert. So the expert goes all over the place. And then the report, which should have come in a month, would take about 6 months because he's unable to finish. And then the fees will go up. You will have all kinds of issues. And we have seen that practically. So what is very important is that how do you actually define the scope very, very clearly? And then you draw very clear boundaries in terms of this is what you want. And these are 1, 2, 3, 4 things that you expect the SME to come back to you with a very clear opinion on those objectives. And the second thing that you might also want to think about is that while drawing that opinion, whether the SME would use his own methodology or the rating scales, or he should be using, I'm usually using the word he, so he, she, firm. So whether the firm or the individual should be using the company's methodology or the approach. So it's also equally important, because what happens is that when you actually present this to the audit committee, you do not want to confuse them, because there are certain ratings, you rate it as high, or you give a certain opinion as critical or unsatisfactory, but then this comes in and then you grade it completely differently, or the SME has graded it completely differently. So it has to be an apple-to-apple comparison. Or else you call it out very clearly, when you present it to the management, that, okay, in our parlance, probably this would be either unsatisfactory or critical or whatever. And while the SME could have graded it differently. So I think it's also equally important in terms of what are the kind of rating scales, what is the report format, because typically what happens is that every SME would have their own report formats. That would be very confusing both to the management and to the board. So what is important is that, you might want to share with the SME the report format that you want the report to be, so that the reader he doesn't get confused. So it becomes an apple-to-apple kind of a thing, and they will be able to relate to the findings that much more clearly. The other thing which is equally important is that use of jargons. I have seen a lot of these technical experts use all kinds of jargon which nobody understands apart from an individual from the same technical background. So you have to make sure that you tell the SME that it has to be very generic report. While he might use these jargons, he will have to either add it as a glossary or might want to give clarificatory notes in the report itself, explaining what those jargons mean. So this is also equally important when you engage these external SMEs. We now move on to the next standard, which is the 300 section. Where we are. Okay, sorry. So we are in now. We have just moved to the 300 section, which is your the internal audit planning and execution of your audit assignments or engagements, whatever you call it. Now, when you start the assignment, what is important is that at the annual audit planning stage, the scope that you would have defined would have been far more large, far more vast, far more wider. But then you definitely will have to make it sharper and make sure that you have done your risk assessments very clearly, and you've got the basis, you have done the data analytics, and you have zeroed down precisely on the scope that you want to really look at. And whether you want to use tools, whether you want to use technology, it's up again, depending upon whatever resources that are available, you probably might want to use, and make sure that with the available resources, information, and data, that you might want to zero down on the scope that you really want to audit. That becomes extremely critical. Once that is being done, then comes the kind of methodology that you might want to adopt. Now, again, use of technology as a comprehensive data analytics, and you do an audit by exceptions after making sure that the data integrity is validated, or whether you want to take a sampling route and then decide on the appropriate sampling methodology that you might want to apply. Because at the end of the day, what is very critical, we use sampling very generically, very loosely, but it's extremely critical. Like your, the poll predictions. So they would interview about 5,000, 10,000 people in a constituency of maybe 20 lakhs, and they say that these are the potential outcomes of the poll result. I think it's exactly how it is, how you extrapolate it on a population, which means that the sample that has been selected truly represents the population that you have selected without using judgmental sampling. So it's extremely critical, and there are a lot of statistical models available to make sure that you adopt the correct sampling methodology, because you're going to apply it on a population. So it's extremely important and critical to make sure we adopt the correct sampling methodology and then extrapolate it to give the extent of the problem, or to explain what should I say, how big the problem is, the dimension of the problem, if we may call it. Next is availability of resources. Some could be on leave, some could be on study leave, some could be on travel, some could be on planned leave. So allocation of resources is extremely important, and making sure that they have the requisite competency and skills. And the other thing which is equally important to consider here is that whether this is the first time assignment or whether this assignment has been done in the past. If so, then you might want to look at the past reports to see what kind of issues, how the issues have been fixed, whether those issues keep cropping up even now. All of that you take in as part of your audit planning process. And then you also make sure that you depute the right people with the right skill sets, or you might even want to decide whether you want to outsource or co-source, whatever as part of your resource planning process. Then making sure that the engagement that you would be conducting is strictly in compliance with the standards that have been prescribed by the institute, or are going to be prescribed by the institute. It becomes mandatory and responsible. It is the responsibility of every auditor to make sure that the individual strictly complies by the standards. And if there's any deviation, they get very clearly called out in the report. Time is, again, budgetary allocation extremely important. When I say budgets, not necessarily in monetary terms, but in terms of time, what is the expected time to be able to complete the assignment, depending upon the complexity or whether we are doing that engagement or that area for the first time. So there are a lot of learnings that has to be done. A lot of process, whether the processes are documented, whether you want to document the process. So you need to actually factor in a lot of things. So people who are familiar with the risk assessment process, we talk about the environment. So you'll have to go and check the environment to see that, how robust the processes are, whether they are documented, whether they are automated, whether the same people are working, whether it's a new function, or whether it is fully automated, or whether it is manual or partially manual and automated, all of that. So you will have to do a lot of study and then decide your strategy in terms of how you want to approach this audit. And then they all become part of your risk assessment document. And then you also pull a lot of stuff from the public domain, whether a particular vulnerabilities or frauds or incidents or deficiencies or issues have been noted in this particular area. You might want to search, irrespective of the industry, if it is common. Then you might want to see that, whether there is a particular event or a thing that is actually missing your eye. Make sure that, that's what is meant by due professional care. So you don't miss out on anything. At least you have done your job well. So which is very, very important. And then you carry out an audit. Next comes your audit evidence. So once you kickstart, once you hit the ground, as I mentioned earlier, so you do not actually, even though as part of your audit procedure, there's something called as inquiry. So which means that you actually do a lot of discussions, talking, and then you might want to challenge, for example, I'll just give an example, maybe bank reconciliation. Somebody says, I review it and I sign it. Then the next question, inquiry could be that, what do you review? Is there an evidence to show that you have reviewed this? So most people just blindly sign, right? It's like the second signatory of a check signing, and you ask, why did you sign? You'll say, the first fellow I've signed, so I've signed. So you actually do a lot of these questioning, which is more inquiry. So while you may not have a documented evidence, but then you might want to document it and say that, okay, these are the results of your inquiry as part of your audit procedure or a process. And then it becomes a documented evidence, even though it's a verbal thing that has happened. So a lot of these things happen as part of your audit, and then you document it. Otherwise, as a practice, without any documented evidence, you would never ever draft a report or form an opinion. And the second thing, which is extremely important, is that how do you actually cross-reference this with your audit program? So when we start the audit engagement assignment, one of the things we definitely do is your audit programming process, where you include all your nature of risks, your control objective, your control activity, then the nature of control activity, blah, 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 blah. You prepare the audit program, then you also have the evidences column in terms of, you also document what evidences you're expected to gather as proof of the effectiveness of compliance. So when you document that, you also mention how many samples, what is the sampling methodology. So it's part of your exhaustive audit program. Now, how do you cross-reference this? Because when you look at the program, it should speak on itself in terms of, okay, this is the relevant evidence, and this is the percentage of pass, and this is the percentage of failure. The percentage of failure is beyond a particular threshold, then you might want to expand the sample, or you might say that, okay, I'm going to fail this test altogether. So again, part of your methodology in terms of how you want to report a compliance process. Right? These are typically used whenever you want to look at the effectiveness testing. Test of design, anyway, you would never have a process, but then when you do not have a process, you might want to, you might not want to fail it, but still you might want to look at the effectiveness, because most times what happens is that you might not have a process which has been documented, but still it could be working very effectively on the ground because somebody is doing the right thing. So then you might want to document it very clearly, saying, while you're not failing this, but still there is a recommendation that you still will have to document it so that you standardize it, so that it's not individual dependent, it becomes more process dependent. So I think these are the kind of various evidences that you actually collect. So it could be electronic evidence. Now it's also admissible. So how do you collect electronic evidence, and what checks and balances that you actually carry out to place reliance on these electronic evidences? I have come across a number of cases where a lot of evidences, electronic evidences, have been manipulated. So you actually carry out a due diligence, more so on electronic evidences. This is the biggest area of risk for an auditor, because typically what happens is that you carry a document and you presume it to be genuine, and then you either pass or fail a particular test, but then you do not know the genuineness or the integrity of the particular document. It has to be extremely carefully looked at, especially the electronic and even manual also. I'm not saying, but then electronic, most times, a human mind feels that something is electronically generated means it has to be sacrosanct, it is fine, but it is not. So I think as an auditor, we'll have to be extremely careful and cautious in use of electronic evidences. Next comes staying in 300 standards. Supervision. So this is extremely important. Every audit engagement will have to be continuously monitored and supervised by the team leader or the team manager, whosoever you designate. Because what happens is that, when you complete the risk assessment process, somebody will have to look at it, whether the risk assessment has been completed adequately or whether certain elements have been missed out. If so, then you call out and then make sure that they get completed. So, and when you use IA tools, then what happens is that, the manager will not sign off for the team leader or the team to move to the next section. For example, now your planning process, from the planning, you go to the scoping process. So from planning to scoping, now if the manager doesn't sign off, then he cannot move to the scoping process till he completes the planning process to the complete satisfaction of the reviewing manager. So you would have these sign-offs at every stage, which have been duly signed off. And finally, once the audit engagement is completed, the chief audit executive signs off on these evaluation sheet, saying, yes, I have also reviewed it. So effectively, you just do not blindly sign it off. You spend time on a continuous basis with the team manager or the reviewing manager to understand the progress of the assignment and the emerging issues which are actually coming up, whether you have any suggestions and thoughts on that particular engagement. So it's a continuous process where you, on an ongoing basis, engage with the various team leaders managing various audits and make sure that the audit objective is never lost and quality is not compromised. So, and all these are actually captured as part of your audit methodology. All of this, including your sampling, your templates, then your reviewing manager, there is a secret assessment, that we follow, which I have implemented, where the team leader will have to come back at the end of every engagement to say that how the team performed, how were their learnings, whether they were able to apply the learnings from the earlier engagements onto this, whether they're very proactive or whether they just do what has been told. All of that's a very detailed this thing. So this actually goes into your quarterly or annually or half annual the employee assessment or feedback. So that, come your annual appraisal time, it doesn't come as a surprise to the individual, because you give continuous feedback to the team member and to the team or the team lead saying, this engagement has not gone well. These are the things which have not gone well. Not that you penalize, but then it gives an effective feedback that next time, the individual doesn't end up committing the same mistake, then how the individual corrects and improves upon this. So I think these are extremely important to make sure that, you stay within the budget, the quality is there, and then you manage the objectives of the particular assignment are completely met. Communication with the management is the last section. Once you have completed your field work, then you prepare your issue sheet, then you discuss it with the various levels within the function on the various findings that you would have come up with, and your thoughts, your opinions, your judgments, wherever you have drawn your own judgment to say that, okay, based on these, I think these are the areas of improvement. This is working well. This is not working well. And then you mutually agree. And even there is a mutual disagreement, I think you agree to disagree, and then you document it and say that, okay, this is the point of view of the auditor, and this is the point of view of the auditee, but then you agree to disagree. Tomorrow, if something happens, at least, you have made your point, you have brought this to the attention, not only the attention of the concerned department head or team lead, but also to the management, say, these are your thoughts, and management might want to do further work on this. So it's extremely important how you also capture agreements to disagree in your report very, very clearly, like the way you do your scope limitation. And then you issue a draft report. The draft report, which has been duly discussed with all the concerned stakeholders, and then goes to the management along with the stakeholder action plan, timelines, all of that. And if it is a repetitive issue, then you also want to highlight that this is a repeat failure. This is a chronic problem that somebody is saying, I fixed the problem. Actually, it is not getting fixed. So I think there is a problem. Either it's an integrity issue or it's a quick fix kind of a thing, but it's not a permanent solution to the problem. But if the risk is very high, you might definitely want to highlight it to the management and say that, you see a big problem out here. And even though the stakeholder says that, yes, fix the problem, but then you see a much bigger, wider problem in this. So these are the issues that you want to bring to the attention of the management. And of course, what the board is only interested is that whether there is a plan to fix the issue. That's what I have seen across my entire career. I've been managing the boards for the last 27 years or so. And what they're only interested is that however big the problem is, that whether the problems are getting fixed on the ground and whether they're getting addressed, and you don't have these kind of repetitive issues cropping up every other time. So I think that's all what they're concerned about. So I think you fix the problem and move forward. So rather than, getting stuck at the same place and reporting the same old issue day in, day out. So I think that's where I think we spoke about the process-based audit. So unless and until you fix the process, if you address only the symptom, these issues will keep cropping up. Unless and until you actually go diagnose the problem and then treat it permanently, you will not see that. So I think that becomes very important as an auditor. But how do you identify the problem? Root cause analysis, I've seen a lot of auditors actually go wrong, which is extremely critical. It's like I always compare the internal audit function with that of the medical profession, right? You do the diagnostics, you look at the diagnostic reports, which we call as analytical reports, and then you draw a certain conclusion that this is the problem, and then the doctor gives you the medication as a permanent fix or a surgery at times, right, if it is bad. So I think an internal auditor will have to very clearly look at it from the perspective that, I have used certain diagnostic reports and I have diagnosed the problem, which is at the process level. And this is the medication that I'm going to recommend or suggest, or maybe it might even require a surgery, right? Because if the problem is so very big, then I think something much bigger will have to be done. Either you have to recommend changing the functional head or change the entire process or the system or an application or whatever, depending upon the impact, the organizational impact it creates. So bigger the problem, I think you will have to take much bolder steps and recommendations to guide the management that something really needs to be done in this area. So I think this is what is communication with the management is all about, and the communication has to be on an ongoing basis. I've seen a lot of management staff not very open to communication, because either they're too busy with their own, or they feel that they have more important things to do, because their KRAs are more on how do I improve production, how do I improve sales, how do I improve my margin, and all of that. So it may not be how do I fix a problem on the ground. But then a lot of managements are extremely particular. They might want to understand. They get to the micromanage the discussions. In fact, they want to get down to the root cause of the problem, and then encourage you to suggest suitable remediation plans. So there are a lot of, you'll see both sides. And then you, as an auditor, I think you should learn to manage both sets of people. But I think this communication is extremely important, and ongoing communication is all the more better. Okay, reporting the results is pretty much what we have just discussed in terms of communication and reporting the results. The reporting the results is nothing but the final audit report.
1 second. It might take more. How many more slides? Because we are.
No, I think not much now. I think pretty much this monitoring reporting is the last slide, I would say.
Please. Because I just informed that this.
Sorry, my apologies. I have completely lost track of time, so I don't see the time actually on these. So yeah, my apologies. But I'll not take more than. Yeah, I will not take more than a couple of minutes. So yeah, sorry. Yeah, monitoring and reporting is also exactly the same thing, except that what we are monitoring here will be implementation of the audit recommendations, mutually agreed audit recommendations within the timelines. And as a practice, at least in the various organizations that I have worked with, what I've implemented is that if a particular recommendation is not getting implemented within 6 months from the time of its actual implementation, then the individual, the functional head, will have to present himself before the audit committee or the board, and then make a presentation as to why that individual, despite committing a timeline, is not able to implement. So which is extremely important. It acts as a deterrent, because the board would have direct questions as to why the commitment was given and why not they are unable to implement. So I think it would bring in a certain degree of seriousness in the way somebody would actually give you a timeline or agree to implement something. So I think the continuous monitoring becomes extremely important. And then while you close an audit finding, you also make sure that you carry out what we call as, typically in our parlance in HCL, as a compliance audit, to make sure that, it's not something which has been just discussed across the board and we have agreed without actually validating whether the thing has actually been implemented. So we do carry out a validation check before we actually sign off to say that yes, this particular observation has been closed. And these are the observations that we actually reopen when some of these issues keep repeating or when they crop up. Because what happens, I'm telling you, what we have seen, at least in my experience, is that let's say in a particular financial system, a particular configuration has been changed. You complete the audit, you issue the report, and then it is back to where it was earlier. So, and then these issues keep cropping up. So even though at the time of closing the report, somebody would have said, yes, we agreed and we made these changes to the configuration and these things will not recur, which is a permanent fix. But then what happens? Somebody goes and tinkers it and then reopens or rechanges and reconfigures, and then we are back to square one. So I think those are the disciplinary issues we just highlight. And this is part of your root cause. So root cause, you also, it's not just about something else. If there's a discipline issue, if there is a non-compliance issue, I think we'll have to be very, very open and clear that there is a problem out here, that somebody is only hoodwinking the auditor, and tomorrow it might land the organization to a much bigger problem. Okay, so this is again based on clause 49 listing requirements. I think Nandaji had spoken about. I'm just covering a little bit on internal audit. I think it's applicable to every listed company. These are the key sweeping changes which have come in Companies Act of 2013. And then it's very clear in terms of what are all the nature of companies where internal auditor is requested. Similar thing has also happened for company secretaries also. So this is the criteria. B is the criteria that is applicable to various class of companies to which an internal audit function has to be. It could be either in-house, outsourced, it could be a member, non-member, all kinds of combinations are there, but I'm sure I think it evolve after a point in time. So this is insofar as clause 49, because it's all available in the public domain. I'm extremely sorry that I have overshot time. The biggest problem with me is that when I speak extempore, I lose track of time, and my sincere apologies for it. My apologies to the next speaker. But I'm available on my email or on call. Any questions, anything that you want to ask, I'm more than happy to answer to the extent that I know. If I do not know, I promise you that I'll come back to you after finding out the answer. Thank you once again for the opportunity. Thoroughly enjoyed this session. I hope you enjoyed this too.
Thank you very much, sir. It was, sir, you have to just stop sharing the screen for 2 minutes. Yeah, just a minute, yeah, because I had to share and something. Yeah, stop sharing. Sir, that what you did for the last 1 hour, straight from the heart, and I could see how involved you are with the topic and all, and I'm sure you'd be requiring a total 2 hours or 3 hours for us to do. Sir, on behalf of the internal standard board of ICAI and Hyderabad branch, request you to accept this virtual thank you note, sir. Thank you very much, sir. There are some questions, but I'll not take now, and we'll take up at the end if time permits.
If they can be shared on an email, I'll definitely try to respond.
Sir, will do it. And thank you very, very much, sir, once again. And I hand it over to Rajambal to start the next session. Thank you.
Thank you, sir. Thank you.
Thank you, Sharmaji, for such a nice, wonderful and elaborate session. It was actually very nice. It was like covering every aspect of it. Thank you. Thanks a lot, sir. And a very warm welcome to all the delegates who are participating. A very good evening. Warm welcome to the speaker of the day, Samit Saraf sir, Central Council Member Daniwa Sharma, and past Chairman, Hyderabad Branch, Pankaj Trivedi sir, And the second technical session is on planning on internal audit for small and medium enterprises. Like in the earlier session, they said every single transaction should be now within the ambit of audit, because now it is more of a trail audit and things like that happen. So in this kind of a scenario, planning becomes essentially important. And when it comes to a small and medium organization, the risk is always going to be bigger because the process audits are not there, the processes and the IFC controls and things like that. It would be a couple of people-driven organization, like a father, son being directors, and all the paper meetings happen. They happen overnight, and a lot of documents are created eventually. So in this kind of a scenario, I would like to quote again that if we fail to plan, we are actually planning to fail. So with this, I would like to introduce our speaker for the day, Samit Saraf. Samit Subhash Saraf is an FCA with more than 8 years of post-qualification experience. Samit is a partner with Saraf Associates as well as Kirtan and Pandit LLP Chartered Accountant. He manages the internal audit for the Mumbai office. Samit has been previously part of Young Members Empowerment Committee of WIRC of ICAI in the year 17-18 and has been an active core group member of the VCAS for the past 5 years, having contributed to multiple committees such as journals, membership, technology, and human resources. Samit has contributed to the illustrious VCAS reference for more than 3 years under the accounting and auditing module. He also holds an advanced diploma in management accounting from the Chartered Institute of Management Accountants, London. I'll not take more of your time. I present the screen to you, Samit.
Thank you.
Get it here now to listen to.
Thank you. Is my screen visible? And am I audible?
Yes, perfect.
Yeah. Okay. Thank you so much. Thank you so much. So good evening, everyone. I thank Nandaji and the members of the IASB for this opportunity to present at such a prestigious forum. Also thank SIRC for this opportunity for hosting us at their platform. VGVS Sharma sir has set the tone with a detailed explanation to internal audit and what it entails. And I hope to add value as part of my session as well. My topic today is planning an internal audit for SMEs. Internal audit in today's world is no longer a tick and check traditional compliance activity. It's moved to a risk-based or process-based audit approach. Typically, the large corporates would have the risk registers. They would have a detailed reporting to ACB. They would have processes and systems established for a long period, audit charters. But when it comes to SMEs, we need to rejig our audit approach, our methodology, and tweak items of scope as well, in order to fit the requirements of the particular SME client. Including risk assessment as part of an internal audit scope when we plan is a critical aspect in today's ever-changing times, especially from last year, that's after March 20, especially when the situations go out of the promoter's control in SMEs. There is a chance that the SME will fail to mitigate the risk, and the chances of losing out are manifold. Internal auditors like us have to ensure and have to support the SME to ride the tide in those times by envisaging the future risks. And if you can communicate better, we can be the to-go person for such SME clientele. So the canvas is huge. There's a lot of things that we can do, and I will be covering that as part of my session. Typical roles that we as internal auditors can play while advising SMEs is typically our advice is taken as part of key management decisions by promoters. We can also help on cost control and optimization measures. We can have a realistic approach of implementing changes of systems based on the universe that the SME operates in. In short, we can be a friend, philosopher, and guide to an SME. That's where we stand. A little background about me: I've been an SMP in the past, and now I'm part of a larger firm. So I will try to throw light on my experiences of the transition and during the session. So I hope you benefit from that as well. With that, we move. The index of contents of my session today will throw some light on what an SME is, what features it holds, what's the definition. It was revised last year in 2020. We'll throw some light on that. Some key pointers of the SI 220 and also 310, what points we can keep in mind. Internal audit charter, what it entails, what it's all about, and what its importance is. A process-based approach to the internal audit, I'll throw some light on that as well. Most importantly, what are the steps to ensure while planning an effective internal audit? We'll go on that. Challenges that typically we face in internal audit of SMEs. From my experiences, I'll be throwing some light. And lastly, where is the scope for value addition for SMPs while planning and executing an internal audit? SMEs, the definition under the MSMED Act 2006, which was amended last year. A micro, it's on your screen, micro entity, the investment below 1 crore, turnover below 5 crores, small in investment below 10 crores, a turnover below 50, and a medium enterprise, investment below 50 crores, turnover below 250 crores. Now, if you recollect in Sir's session, section 138 of the Companies Act mentioned that internal audit is applicable to an entity when the turnover crosses 200. So typically medium-sized enterprises might come by virtue of law, but as a matter of good governance, we should be suggesting our clients, especially the SMEs, to implement internal audit as a good governance process at the time right now till they are emerging corporates and before they become large. The SME definition under Companies Act 2013 is the paid up is below 2 crores and the threshold of turnover is below 20 crores. What are the key attributes of SMEs? Typically, when we see our SME clientele, most are promoter driven, family oriented. Basically, the power is concentrated in the group, a small group of individuals, mostly again, family owned. Each process, for example, finance, procurement, sales, is typically headed by a member on the board itself. They head that and they have a team under them, which is typically a small team. Business segment wise, there is a limited business segments that typically are there in SMEs, legacy business that happens. Manageable business activities under an SME because they are not yet a large entity. When it comes to internal controls, from our experience, we've seen that there are limited internal controls already in place, and there is a chance of overriding these controls by management by virtue of them knowing this process as a legacy practice. That's where our role becomes very crucial as internal auditors. And they are outsourcing many functions like internal audit because they might not have that expertise within the organization. When you are planning an audit for an SME, you need to know the critical areas of concern that affect SMEs. For example, in human resources, there might be issues with retention, staff loyalty, the skill sets that they employ, the pay grades that are part of the SME structure, employee benefits. Many a times it's not even documented. So you need to add those controls as part of your audit if at all you are doing an HR audit for an SME. When it comes to regulatory compliances, ever-changing landscape of taxes, increased number of filings, newer regulations that keep coming in, GST, TDS, and many other acts. There is someone that needs to be keeping the tab on these newer regulations that are happening so that the SME can take most benefit and avoid any kind of penalties. When it comes to financial matters, there is a capital constraint, mostly are self-funded. And when they go for bank loans, there is a chance that they might not get the best deals owing to the small setup. There might be cash flow issues as well, gestation as part of the business, debtors management, debtors being delayed for a long period. So these are typical issues that can happen. When it comes to technology, unlike the larger companies, there might not be an IT infrastructure in place. So that means, when you talk of a firewall or a server, especially in work from home stage, could SMEs, anticipate this on day one? Maybe not. But 1.5 years into the pandemic, I'm sure many SMEs must have taken that step. And here internal auditors also play a very important role. Software licensing, many a times, the Microsoft licenses or any other licenses that we take typically need to be absolutely licensed. The OS needs to be licensed. Past experience has shown that it takes some time for organizations to culture themselves to go in for an official license. That is very important in today's time, that to avoid any kind of cyber attacks, we need to have a software license in place which is valid. Use of tools, there are many tools like timesheet, management tools, practice management tools. The company can also track the cost, the budget. There are some tools that are already available. As auditors, we can suggest these tools to them and ensure that they're using that as part of their business. When it comes to strategy, demographics can be widespread. what are the peers doing, what are the business under that, what is the customer mix, any products that the company is heavily depending upon, lopsided. So we need to bring that to the notice, because as we've all seen, some industries in the pandemic were losing out. So if you are in a business that is not pandemic proof, if your client is in a business, the problem could be that you might have a direct hit to your business. So that is something that we need to envisage as auditors. And lastly, benchmarking industry standards. SMEs need to know what's happening in the sector. Someone needs to go through the reports and try to envisage what's the ups and downs in the sector that's happening. With this, we come to the second slide, that is about SI 220 and 310. VJS Sharma sir has already gone through this in detail. I'll just throw some light very quickly. There are two levels of planning when you plan an internal audit. One is at the start of the year. There is an annual internal audit plan that is prepared and it is presented before the board or the audit committee. Now, typically in an SME, it would be the board or the promoters. We need to get their approval before we implement. Or if the in-house internal audit department is there, there might be certain departments that are outsourced to SMPs or internal audit firms. These are broadly the two levels of planning that exist. When it comes to documentation that we need to ensure when we plan, there should be a good information gathering, a background research about the business of the SME, the sector of the SME, what are its operations, what are its processes, any past issues that have impacted the business and can continue to impact the business, so risk mitigation comes in place, and what is the impact to the sector for the foreseeable future. When it comes to audit universe, there are various processes which are core and support. We need to broadly put them in a flowchart. And when you plan for the internal audit for the year, you need to ensure that these important core processes as well as the support processes are covered as part of the plan. Before starting an audit, we can also have an interaction or sort of a walkthrough with the key stakeholders, which are process owners or the promoters, to understand how they do business. If there are SOPs in place already which are documented, great. If not, this walkthrough is going to be very critical and integral for the way you do your audit. So this is a very important aspect. You need to document your discussions, your findings, so that it serves as a master data or a backing for you when you do the audit. Risk assessment documentation. Is there a RCM in place? Is there a IFC matrix in place? SOPs are there in place? If not, there is an opportunity for SMEs to advise and add value to the internal audit when you are planning. When it comes to availability of resources at your end as an internal audit firm, you need to estimate, because the problems that we as SMEs face many a times is we don't have an adequate team at all times to be able to depute to the particular internal audit. So you need to plan in advance. You need to have the necessary skill sets. If you're doing an HR audit, you should have the skill of understanding labor laws, stat compliances, what is the hire to retire process, for example, and that applies to other processes as well. So it's important to plan ahead. And lastly, in this, the overall annual internal audit plan has to be duly approved by the governing body. In case of an SME, it's typically again the board. This is how you broadly plan under the standards of internal audit, which cover planning. Internal audit charter. Now, this term to us as SMPs may be new to some and maybe known to some. I'll just throw some light so that I can aid in your understanding. An internal audit charter is basically a formal document which is approved by the board of directors, and after it is agreed by the stakeholders, that is the management, CFO, CEO, for example. Typically, an internal audit charter would exist as a document when internal audit is managed in-house by a chief audit executive. Broadly, it would cover internal audit's purpose within the organization, what it's supposed to do, internal audit's authority, what areas it is covering, what responsibilities it has, and what its position is within the organization. Now, when you see position within the organization, there are certain aspects without which, if the internal audit head does not give an okay, the process would not move ahead. So this is what typically is covered as part of internal audit charter. To summarize, it is the blueprint to the organization of how internal audit as a department will operate. It will have things like conflict of interest, what access to data the internal audit has, what are the reporting lines that the chief internal auditor has to maintain. He reports functionally to the audit committee, administratively to the HODs as part of management. So it's a very critical role that the chief internal auditor plays in-house, be it as an external firm that is taken in. As I mentioned, responsibilities are also part of the charter. The plan for the annual internal audit is also laid as part of the internal audit charter here. What are the timelines for submission to the audit committee? How do we report the executive summary, which covers the material deviations that we have noticed or we would notice as part of the year's audit? And when you come to the concept of internal audit being outsourced, the internal audit charter just changes its form to an engagement letter. So to summarize, an internal audit charter would be applicable if the function is in-house. An engagement letter would be applicable if the function is outsourced to an internal audit firm or a CA firm. That is the basic difference between the two. The contents, however, remain the same. Before we move to planning in depth, these are the four major pillars as part of any internal audit: planning, fieldwork, reporting, and follow-up. I will be throwing more light as we progress ahead, but this is the process that I personally follow, and yeah, there we are. Moving to the steps of how we plan an internal audit. Gone are the days where we would traditionally do a compliance check. Now, the recent changes in our forum have been that internal audit is now risk-based. Broadly, there are around 6-7 steps that you need to follow when you plan any internal audit. First, understand the organization. I've already thrown light earlier. We'll again look at it in detail also as we proceed. Second, identification of the specific audit universe, that is the core and support functions. Third, risk assessment. How do we as chartered accountants or internal auditors identify risks in an efficient manner and in a timely manner? Fourth, audit planning. Time, resource allocation, what skills are required, what time frame we would apply, that will come under this. Next is drafting the plan and discussing with management. Then the board or the promoters or audit committee approval to this plan, and lastly, implementation of the plan. Without all this, implementation is of no use. So it's important that we adhere to the 6 steps with utmost importance, so that the implementation for the year is absolutely well planned. When it comes to assessing risk, on a periodic basis, we need to assess the risk that is applicable to the SME. I would suggest annually is fine to start off with. And if at all there are any changes during the year, external or internal factors that may affect the company, you may need to update the plan during the year, and obviously with approval from the management side. Step 1, understanding the organizations. Now, what do you do? How do you approach this? So there are various documentations that you need to check, or various background research that you need to do. Check the hierarchy, check the organization chart that the SME has. Who are the promoters? Who are the members of management? Who are the mid-managerial levels? How does it work? Who are process owners? You need to understand that. Also study the authorization matrix. Many times it would be in place, but if it's not, then as part of your audit, it would be a recommendation. Main thing is this to be documented. If any activity is not documented, it's not done. For you to sign off on an internal audit of an SME, it's very important that we ensure or stress on documentation as an aspect. Many times it's seen that it is given a miss, or they say it's a legacy practice. We know what we are doing. But as internal auditors, we need to push and we need to ensure that it's documented. Next, if the company has a vision and mission statement, please go through it. It will give you an idea of where the company is progressing. So it will help you envisage the future risks that the company might entail. If the company has SOPs, manuals, or process flow charts, please study those, because it will aid in your understanding as part of planning. Any past reports from auditors, any industry research reports that the company might have, or you can download from public domain, please go through those. It will give you an idea of the company as well as the sector. When it comes to annual reports, filings made, you can also see if there are any qualifications at the time of your onboarding that the auditors have, stat auditors would have given, or there are some regulatory filing missouts that have happened. That will give you an idea of how compliant the company has been at the time of you stepping in. So you can plan your audit accordingly. Understand the business process in detail. Obviously, why? Because it will help you draft the scope very effectively. If you do not understand what processes they are, and if you use your ideas from another audit, there might be certain lacuna in the plan itself. So it's very important that one size does not fit all. That's what they say. So that's what applies to us also when we are drafting the audit plan. News reports, RSS feeds. I think today in the era of the internet, everything is available at the click basically on the internet. So it's very easy to find information that you might be looking for. So go through this as much in detail, train your team to get this information so that your background is really strong when you're planning. Next, once you're done with background, you can interact with stakeholders, do a walkthrough, understand their perspective. There can be various, promoters might have a different take to it. They might want 100% adherence to stat compliances, for example. The C-suite level, that is CFO, CXOs, they would have a different take to how they want internal audit to approach. And process owners might, they might view their issues of the actual shop floor level, what problems there are. They might want you to understand that. So you need to understand the entire framework of the client that you're about to advise. Only then will you be able to give good advice and good recommendations which are practical. Moving to step 2, what is the audit universe? There is a concept called auditable units. Now that might include a department, for example, HR, finance, O2C, that is your sales, marketing, procurement. It might be a process, again, O2C, hire to retire, procure to pay. There might be various processes. Entity, if there are multiple entities as part of the SME and there is a need to audit those particular, sub entities that are there, that can also become an auditable unit. A function or a location, a different plant that is based away from the head office, that can also be termed as an auditable unit. So you need to understand your entire universe and plan accordingly. Not necessary it is only that sales, purchase, or finance and HR. That is not what we need to advise going ahead. There are various aspects to the audit universe and accordingly we should plan. Core processes from experience might include O2C, P2P, inventory, logistics. Now this I have written with an angle of manufacturing industry. When it comes to services, the core processes might change. Support processes may include finance accounts, HR, IT systems. What is the framework of data security, software, hardware? If you do not have the skills, you can either upgrade your own skills or get an expert to do a diagnostic health check of the SME, because in today's times it's very important when we are work from home that the IT systems are very strong and tight. Stat compliances again is a very important area which we need to cover in all the quarterly runs, so that it becomes a part of your audit universe. And the new concepts are around qualitative indicators, safety audits, health audits, ESG, that's environment, social and governance. Many companies are now taking deep interest in areas like these. So if we can advise our SMEs today on areas like these, it can definitely help them build a better business, a good governance business in the future. Coming to step 3, very important aspect about risk assessment. The internal auditors have to conduct an overall risk assessment. We need to identify the significant risks, and you need to chart your audit engagements based on prioritization. All risks are not important. You need to break the certain processes into sub processes and understand where things can go wrong. If you remember 2 slides earlier, I had mentioned you need to interact with stakeholders. That is where you can understand the processes, mark the loopholes. You can also try to identify maybe processes are not very tight there. They are legacy practices. That can be a risk tomorrow. Accordingly, you need to assess the risk and prepare your risk control matrix in this particular step. If there is an existing risk control matrix or IFC, you may want to test controls as part of audit. If there is no RCM or IFC in place today, you can also offer to prepare one, this as a document, and then test on an annual basis. What are the various types of risks, you may ask? There is operational risk, financial risk. Now, operational risk is about business process risks, basically. Financial risk is about a financial impact to the company here. A compliance risk is a legal or a law non-adherence or a statutory compliance non-adherence. That can come under compliance risk. IT risks is about maybe there is an ERP, but there is a system failure, or the controls are not alerting you. So that can be an IT risk to the company. Reputation risk is more so in retail companies where you're customer facing. Any if I were to give you an example, there was a noodle brand around 7-8 years back. They had recalled their products because of some flaw. So that can be an example of reputation risk. Anything that impacts your goodwill or your brand because of a certain mistaken process or misstatement, that can apply a reputation risk. And lastly, fraud risk. A fraud risk is inherent in an SME if the controls are limited or not tight. So you need to give specific importance to fraud risk when you plan an internal audit. Coming to step 4, most important, how do you plan the audit? You need to consider the inputs from the stakeholders. Finalize the plan before the year starts, because there will be some time before which you will have to approve it from the promoters. There will be a mix of core and support processes as part of the audit plan, which I've already thrown light on. When you draft the scope of each of these processes, you need to understand the process flows from various levels of management and promoters. Exhaustively prepare it by your understanding, communicate it to the HODs, let them give you the feedback, let them come back and say, hey, you've not taken these particular two processes, please add them as well. When there is a top-down approach in the SME, it's more effective for us as internal auditors to give value. So it's very important how you draft the scope. You cannot take a scope from some other company and apply here. You need to put in your mind, you need to understand the processes of the business to draft the scope accordingly. Yes, there may be changes as you audit. So when you do this department the next year, you can implement those changes as well in the plan. Root cause analysis. This is very important as a concept, and I've seen that many SMPs can probably miss out, maybe for the want of time, or they can't dedicate that kind of resource to that particular audit. But if you can advise on root cause analysis, broadly it's under 3 heads: business process, people, or IT. What is the root cause analysis? It helps you to avoid recurring observations or recurring errors in a particular business process. If we can tell the client that this is the problem, of why this problem is occurring again and again, and we can help them plug it with a practical recommendation, yes, that is value add, and you will be respected as an auditor. How do you as an auditor plan to approach 100% compliance with regulatory requirements? Firstly, you need to update yourself. You need to know what TDS laws there are, what GST laws are, what are the latest amendments in order to advise your client. There are various regulations that change in TDS, GST, PLI, CSR, whatever that might apply to your particular client. You need to be on the top of it. You need to know what is the latest amendment. If you do not, then we are falling short in our service as internal auditors. And as SMPs, if we need to upscale to the next level, it's very important that we keep continuous upgrading our knowledge. Lastly, when you plan the time span for the audit, that is from planning stage to issuance of report to the promoters. As SMPs, sometimes it might affect that we know X remuneration is going to be paid. We need to maybe plan the audit in that time frame, but you need to give an idea as well to the promoters, to the management, that my field work would last for these days, my reporting will last for these days. So they have an idea for what time you'll be doing that particular department's audit. If you can give an approximate but fairly good estimate to them, the obstacles from their side would be lesser. They would know that you are going to be in the organization for so much time, and accordingly they will be ready and they will depute their resources as well. Step number 5 is about discussing the plan with the management. The plan, as I already said, has to be approved by the promoters or the board, and the board meetings needs to record it as part of minutes. We as internal auditors need to give assurance, reasonable assurance to the promoters or the management that the processes that are important processes are being covered and the controls are in order. If they are not in order as part of our audit, if we find, then we need to give a practical recommendation to rectify or remedy the particular lacuna that is there, and also bring out the implication of if we do not recommend go ahead with remedial action or corrective action, what is the implication that might be there. See, when you holistically present this as part of your internal audit, definitely there is much value add, and there will be a lot of meaningful discussions with the board as well. Audit plan should consider inputs from stakeholders. What is the frequency of timing of your various audits that you're going to do as part of the yearly audit? How are you planning your resources? What are the skills that are there depending on the complexity of that particular function? Have a realistic approach to the engagement, and maturity of processes for you to know as auditors is very important. Is there an ERP in place, or is there no ERP? Is there only an accounting software? What are the legacy practices? Do they have maker checker? It's very important to understand the maturity and accordingly approach the audit. It will help you give better solutions. Step 6 in planning is about getting the board approval to the plan. The plan will be shared with the respective HODs for their inputs as a formal communication once the board approves the audit plan. There might be ongoing changes depending on internal and external environment, which are not maybe in our hands as auditors, but we need to be in the process, identify and accordingly intimate the board if we need to change the audit plan in any way. Now, what could these changes be? There can be changes in laws, regulations, industry scenario. Some products, maybe the SME has an export business and suddenly the government probably stops export or levies too many duties on that particular export. Will it still be profitable? Maybe, maybe not. We need to bring that out to them as part of, once we identify. Again, changes could happen in the plan if there is a change in management or change in the owners, change at the leadership level. Maybe they have a different approach. They might want you to cover certain different departments. So you need to have that touch base with the new management if at all the case arises. If there is a sale or an acquisition of business, you might need to add that or delete that from your auditable units. You need to be on top of that as well. There can be some new risks that you did not foresee at the start of the year. Again, in COVID, there were many risks that happened. So us as internal auditors, if we see that this is going to affect my audit plan or materially change my audit plan, please bring it to the notice of the promoters. You might need to change your audit plan accordingly. Again, there might be political or environmental factors that might play a major role or a vital role in affecting your audit plan, war or a pandemic. There might be these cases that happen, but we need to implement the change ASAP so that annual audit is effective in place. If at all the audit plan is required to change mid-year, we need to communicate to the board, seek approval, again follow the whole process of formally communicating to the HODs. And last step in this is the audit plan is then implemented on the basis of these 6 steps. And there you're fairly estimating how you're going to start and end. So your planning, if you follow these 6-7 steps, is going to be within a certain framework. You know what you can expect to do. Your client also knows what they can expect from you. What are the challenges when it comes to internal audit of SMEs specifically? This is again from my experience as well. You might have your own outlook or you might want to add to this list. When you audit certainly, family driven enterprises, which are SMEs, they might have legacy practices that they've been doing from first generation, second generation, last 10, 15 years. They have not changed the processes because they feel they have a lot of control on it. If the SOPs are not documented in line with these legacy practices, the system will remain people-driven and not system-driven. As internal auditors, if you need to give a value add, you need to implement a documented SOP where if that person also is not in the organization in foreseeable future, the SOP is in such a place that it will be system-driven and the next person who comes in can run the process as it was envisaged to be run. As auditors, we continue to test and identify and mitigate risks of this particular process. So please ensure that there is a documented SOP. Second, a resistance to change. Many a times when auditors, we get into organizations like these, there might be resistance from people who are at the process owner level or a management level that why do we need audit? Why do we need to do this? I know all this process already. For us, it is important to change that outlook because there is a certain value add. If we follow the steps that we just seen, there is certain value add that you can bring to the business to give them a third party view as to how they should be doing something in a more efficient way or running the business in a more efficient way. Internal audit is typically considered sometimes as a compliance requirement or a cost center until you bring value add. The SMEs where you are, if internal audit is not mandated under section 138, they might just take it as a compliance requirement, or they might just say, come do the audit, do your financial traditional audit and go give the report. But if you have to give a certain value add, you need to, follow a certain process, talk to them about risks, culture the clients in understanding what risk mitigation or risk assessment is all about and what you are here to do so that they can concentrate on their operations. And this can be handled easily by the internal audit function. If there is a lack of a top-down approach, now what is a top-down approach? If the management does not want an effective internal audit, you will never succeed or it will take time for you. So it's very important to convince the promoters this is your plan, this is how you plan to improve the processes, this is how you will make the control stronger, tighter, so that we can mitigate risk in the future. Changing that aspect is very important. The top-down approach is absolutely important in my experience, without which in SME scenario it's very difficult for us. Pressure on audit fees. Sometimes the budgets are low when it comes to SMEs, but the work given to us or the expectations from us is high. Now you need to reach a midway there. Also, we need to see how much resource allocation, time allocation is going from our side so that you're not on the losing side. Also ensure that the client is also gaining from your advice. Sometimes there's a focus on financial audit instead of risk or process audits. It's very important once you plan the audit universe to include these core processes and support processes. Finance then only happens to be a support process, not the main integral process. Investment constraints. You might identify the risks. You might tell them, look at this is wrong, or you need to invest in this or improve this process. But there might be cash flow constraints or investment constraints, which might hold them back from upgrading their systems, from getting a new ERP, from taking tools. It's a gradual process. No SME is ready on day one, but you need to chart a plan for the next 3 to 5 years to ensure that they move from SME to an emerging corporate. Precaution versus cure. If I'll give you an example here. Sometimes if you bring out a point, for example, about non-adherence of some section in Factories Act, the SME management might come back to you and say, no, this has never come as an issue. No factories officer has ever pointed this out to us. And if you are presenting this and by chance in future there is an implication or there is a visit from the factory office, there is a penal as well as imprisonment risk to the directors. So it's very important that you inform or you communicate this risk so that precautions are taken in advance, so that documentation is there in place, so that the controls are rectified, so that you don't need to go for a cure in the future, which might be costlier than precaution. Staff loyalty, especially in family owned. Sometimes there is a particular person who has been in the system for 20 years, 25 years, the second in line to the family, basically. He knows the processes. So when you're suggesting a change, there might be resistance. And there, might be this person has been there for a long time. So that might be a challenge to you. It's your skill, how you use it to your advantage. Lastly, weak internal controls. Maybe maker checker is not there because those many people are not there in the department at all. Then you are now the checker in this process. So you need to improve the controls in such a way that till it comes to you as part of your internal audit scope, there is already a certain part of risk that is already taken care of. You are improving the process. You are intimating to the process owner that you need to improve your process, have this documentation so that you don't have this risk tomorrow. So improving controls as part of our audit again will be termed as a value add. Coming to my last slide, this is about my experience again, how we as SMPs can offer value to our SME clients. You need to concentrate on continuously upgrading your skills. In today's scenario, as chartered accountants, there are many laws that keep changing. Ind AS that is now applicable to many companies with a certain turnover criteria, or there are certifications that the ICAI is also offering. You need to undergo that training. You need to be relevant. You need to take certifications so as to advise your clients in a much more effective way. You need to know what you're advising. Second, about knowledge of the recent government announcements that apply specifically to SMEs. Now, if you are in the SME sector, you are having a lot of SME clients, you need to know there was a relaxation of TDS in the COVID era. There was an amnesty announced by Service Tax Authority, or there was the package of Atmanirbhar Bharat that the government announced. You need to know what these items are, what these announcements were, and how you can implement this at your SME client. Next, please try to include niche areas such as subsidies, tax incentives, PLIs, CSR. I leave it to you how you do it, but these are areas that most SMEs can miss because there are not a lot of chartered accountants who advise on these items. All these four that I've mentioned here, there are many others, but these four again are very crucial because you can save a lot of fund flow and cash flow for your client. And if you do it, there is tangible value add that your client will definitely see. You can bring this as part of audit. Again, if you implement this, if you get experts to implement these subsidies or take incentives, you can add that. Try to remain more relevant in terms of the SME scenario that you're auditing. Map the SME's practices with the industry practices. Now you might have similar clients but a larger client size basically compared to your SME. If you see the large client is using some best practices, which is similar sector, you can try to implement the best practices because today's SME is going to be tomorrow's large corporate. Always plan in such a way. Root cause analysis, I've already thrown light on that. This will help you, avoid repeat observations. The lesser repeat observations, as an auditor, you are being more effective. So that is again a metric for you to judge your own performance. Shuffle the quarterly audit process runs every year. Suppose you're taking sales in Q1 for this year. Next year, you might want to take sales in Q2. The reason for this is you try to see the cycle changes, cyclical or seasonal impacts that the business has in various parts of the year. So it's very important to rejig and shuffle the audit universe that you have year on year. Important to be a very good communicator. Try to improve your presentation skills, because no matter how much good work you do, if you cannot communicate or have a wavelength with the promoters when you're advising, they will never understand what you're trying to say. Try not to be too technical. If you bring out your point in a very lucid way that the promoters can understand it, and then give an assent for the recommended action, that will be more effective. So try to concentrate on this as well. Work not documented is work not done. I've learned in my 8 to 10 year career that if you miss on documenting something in the future, if you can't prove it, it's as good as you've not done it. So it's very important that you document your audit scope, your approach, your methodology, how you've arrived to these audit observations, who you have discussed with, who are the audit team members working on it. Very important. No matter if you're working for an SME or if you have a large clientele, documentation is a crucial aspect for an internal audit. There is also an SIA on that. Look ahead, build a better tomorrow, because today's SME might be tomorrow's emerging corporate and even larger. And with the government now, relaxing the thresholds, they want more and more companies to be part of this definition, so that there is relaxation from, ease of business basically can be implemented easily, so that companies can grow more in size. So always look for the future, look to build processes today, so that it's not very late tomorrow to implement processes with a QR in mind. And lastly, internal auditors can move from being just an internal auditor compliance to a trusted business advisor. When you advise SMEs, there is more direct touch with the promoters. They will appreciate you coming and having more dialogues with them, which are meaningful. They can understand if the business can improve with your suggestions. You will slowly move from an internal auditor to a business advisor. That still remains with management support. You are going to be as critical as you are on day one, but with more effect. This quote has been already mentioned in today's seminar at, I think by Nanda sir as well. Failing to plan is planning to fail. This is absolutely important. And because I was given planning as a subject, this comes first to mind. Always plan ahead. If you don't, the future, you'll definitely, fail. So with this, I would like to end my session. I hope I'm within the time frame given to me. Thank you so much for a patient hearing, and hope it was value adding to you. Thank you.
Thank you. Thanks a lot. It was indeed so nice, crisp, and just put in the nutshell. And I personally, I myself, I like the process flows and the other things which you were actually using, that you could share it with our listeners and with our delegates today. I think that will bring in a lot of value add, because it is, for a small and medium practitioner, it is really going to be very difficult to find what are the industry standards of getting the work done. What we have done till yesterday, how to improve it till to today. I think maybe the processes and the work shared by experts like you helps, and it was really, really very great presentation. Thanks a lot. And I just love the way you said, work not documented is not done. I think that is a key thing that, and that's a key thing that we need to focus these days, that it is very important that if you're not able to prove what you've done, there is no point. It is as good as a blind signature.
Absolutely.
It's just not going to make any sense to anyone. The value and the worth of the signature is when you're able to prove what you've done behind. And amazing. I think every word hit straight like a bullet in my head. And I'm a person who keeps talking about having SOPs for everything, right from training to end. And I think the way you spoke, that also was amazing. A great presentation, Samar. Thank you. Thanks a lot.
Pleasure.
I just loved hearing to your presentation.
Thank you so much.
Yes. Over to Pankaj, sir.
Thank you very much, Raju. And thank you. It was a great session indeed. So I would see all the come on screen on the next session. If Aarti, our technical team, is there, can you just call sir and check if he's available, please? Dr. Yes,
have joined
thank you,
up.
sir. Thank you, sir. Thank you very much, sir.
Yeah.
Moving on to the session, which is for internal audit, which will be taken by Dr. Paul Jack. And before inviting him to speak, I would like to just give a very brief introduction of sir, who qualified in 1981 and is a rank holder in CA intermediate exams. He did DIRM from ICAI and is certified in risk and information system controls. He did his PhD from University of Madras in 2005 in internet Director Information and Risk Management Service with Messrs. CNK Associates LLP Chartered Accountants and Director in Panasonic Carbon India Company Limited. He has also worked with Brahma and Company, E&Y, Royal Services Chennai, and the Chief Executive Nandaji Limited. Company in software development, software training, and software consultants. His overseas assignments was with Signet Assurance on behalf of Royal Soft Services Limited in USA and with Global System Integration, which is a subsidiary of Dar Multimedia Corporation in all worked in Sri Lanka. He taught various subjects related to finance, management, information technology, computer science, computer applications, program languages, and engineers. He won the syllabus for MCA, University of Madras, 1984, and Board of Studies member, Sri Saraswati Tyagaraja College. He has regularly presented papers all over India in seminars by ICAI, ISAC, University of Madras. He is also a member of Institute of Internal Auditors and was aspect of the Madras chapter. I present to over to you, sir.
Thank you very much, sir, for the introduction. I also thank you for the opportunity to speak. I thank all the office bearers and members of the IASB and our ICAI. Welcome all the participants. I'll quickly run through what we are doing. Today the topic is we need to look at the techniques to be used for internal audit. It's basically how we go about doing it. So what I'll do is I'll finish our theory part quickly and then go to the formats. The theory part, just a few points here. Any audit, these are the standard steps you would follow. Whatever framework you're using, it doesn't matter whether it's from IAA or ISACA or ICAI or AICPM and whatever, England and Wales, it's all the same, more or less the same points. One is the preliminary survey and the planning component, which of course we have got a lot of earlier speakers who spoke about it. And one thing we need to bear in mind when we take these standards is that in most countries, internal audit is done by the staff of the organization. Very rarely are outsiders called in, maybe for two reasons. One, there's no skill set in the organization, so they call an outside audit or a consulting firm. Second is maybe they're short of staff, so they're looking at co-sourcing. But in India, the picture is slightly different. Most of the time, we look at internal auditors as outsiders, audit firms. But then we also need to know internal audit can be done by consulting firms, can be done by anybody, particularly operational audits. So with that background, if you look at the first slide, it'll be easier for us to understand. Now, the objectives, procedures, what is available, etc. An insider normally has a much better idea on what's happening. For an outsider, it may take a little bit of preliminary work. That's why it's called preliminary survey. It's like you're buying a house, you just want to have a look at it without any idea what it is. You just try to check it out. Then comes the notification. That's the second part. An engagement memo is sent to the management, etc.
this memo will indicate the audit scope, which has been discussed earlier, audit universe, whatever, all those were told to us, and timing of the audit, etc. So this is the second step. So if you notice, the first step was with no obligation. The second step, of course, we are expressing an interest in the assignment. Now, in the third step, now this is where the serious steps start coming in. You have to hold a meeting with the internal audit, if they have one inside the company, and then management, key employees, and so on. This is to understand. We already done the preliminary survey. We have given the scope. Now we need to understand whether we are talking about the same thing or the scope is different. So we need to make sure on the understanding component, and then of course it facilitates the beginning of the work. We keep documenting all the papers and all the meetings. And if you look at, okay, then the audit starts. I mean, if everything is fine, we have agreed. You start the field work. Now this is you start auditing everything. We were told to look at the RCMs, flowcharts first. Then the RCMs where you capture the controls, control objective, risks, then you evaluate the controls. Okay, basically COSO will be the framework for our RCMs. All the 17 components we'll look at. Those who are doing the IT component may be looking at only some parts of it. IDGC would be 11 and so on. COSO is the best framework for RCMs. One of our earlier speakers spoke about IFC, and you can prepare the RCMs for all the areas. It's not restricted to any particular area. Then once you get in there, then whatever I told you, the risk assessment, etc. And there is something called fraud risk assessment. You need not investigate, but at least if you suspect or if you feel there is something wrong, then you have a job of the internal auditor to highlight it either to top management or if they are not listening to the audit committee. Of course, test of controls we carry out. And then there is a communication with the management through two ways. One is an agreed upon reporting phases. Second is if you notice something which is wrong, completely wrong, you have to immediately report it. This is very, I'm just taking the global standards. But in India, it's a little more stringent because for those listed companies, SEBI says if you notice something seriously wrong, you have to update your website within 2 hours. Suppose there's a flood in the night time, and something gets flooded, it's a lot of work the management has to do, and they may probably looking at the internal auditor for help. Of course, the class is for small and medium practitioners, but many small and medium practitioners take assignments from the large auditors. So it's a mix of everything. Draft reports are always given to the management for their answers. They call it responses. If somebody has already told us, the earlier speaker, they can agree with you. If they disagree, both the points of view have to be stated. That's what the standard says. And once they accept it, fine, then you move ahead. It's only a draft report. So you may have to change some points if you are fully satisfied. It's the auditor's prerogative to decide whether his concerns are addressed or not addressed. Then when you finally finish, of course, you'll have an exit conference or what we call the exit meeting. You present this audit, whatever the reports, and here maybe we'll be seeing it tomorrow or something. You can also use a lot of data visualization, particularly when you're talking to the top management. You can show them animated pictures and graphs or JavaScript files or some kind of visualization, Power BI, Tableau, whatever, which makes it easy to explain. Like a lot of times we were told about the jargon, make it easy for the person who's watching. If you have a picture, it's called storytelling, then visually you can explain what you are trying to convey. Like if, for instance, sales was dropping, that's one point of view. One data piece we have. Second is we had some attrition in a particular location where the sales was dropping. That could be a second point. Now they can be presented independently, one from the HR and one from the sales. But if you could superimpose each of them and say, because of the lack of staff, customers were unable to service, so this is the drop in sales. The normal thing is like one salesperson could handle 20 people. Now we're short of people. That will have a better impact if both these facts appeared on the same slide or same animation. So it's got nothing to do with the exit conference, but that's got something to do with the way we present the report. Now going to this final audit report, now this is what you're really going to sign off. And once you're signed off, there's no going back. So has to be done very carefully. So once we sign this off, you got all the management responses. Final report is presented. You may have follow-up points for the next period or next audit cycle. And then it goes on, etc. Now I put a note here which says, audit reports are public record, although their distribution can be limited. See, the point is, these internal audit reports may be shared with the lenders, borrowers, investors, a lot of people. I mean, it's a whole lot of people. Even machinery companies may not install a machinery unless they're assured of some minimum safety standards or operating standards. So we said put some disclaimers. I think we'd still stay with the disclaimers and limit the use of your report, because no report is complete, maybe for many reasons. Better to tell them why you issued this internal audit report. What's the objective? So if I take a report on, say, calorific value of coal, meant for a coal production for their plant load factor, and then somebody is using that to handle the customs cases, it won't make sense. So better, because there we need a chemist report, not an internal auditor's report. So we may have to be a little careful on this. Now these are the 7 steps of what I briefly explained. Now what I have to run through is the sampling techniques, but I start with this note. Sampling is almost disappearing. So though we have a lot of bodies like the UK, the US, Australia and India and so on, we still talk about sampling. Globally sampling, because most of them, even a small person has got Tally, you can pull all the data out. Otherwise there are Excel sheets, you can pull all of them out. Unless the books are not there or it's not automated, you may not work with sampling. It's not automated, I understand, then we still sample. You'll have to work with 100% of the population. Machines are fast. You got the tools for it. You can easily do it. But since we still have to study sampling, so why do we study sampling? There are 3 reasons. One, you want to look at the sample risk. And what's the risk of my taking a sample from a population, coming to a conclusion, and that is wrong. I mean, it doesn't represent the population. Second is, what is the tolerable error which we can have? It's basically tolerance. Then, using this error which we found out, what is the expected error we expect from the population? Usually they do this for billing, invoicing, wrong, revenue leakage, wrong invoicing. They do it for stores, missing stores. A lot of things we have to sample if we are using sampling. There are 4 methods. The last one is no use. Judgment sampling is not acceptable if there is a disciplinary case. Okay, something goes wrong. Judgment sampling is not acceptable. It's only the first 3. Now, random sampling is you use a random number generator or Tippett tables, something you use. I mean, some, like even in Excel, you could generate random samples. There's an add-in for it. I mean, it's not the random function in Excel. Then you have to write a formula. So better to use the add-in, generate the random samples, and whatever items it points to, pick those out as the sample. Use the add-in in Excel. Don't use the random function. That's a mathematical function. What you are looking for is a statistical function. In stratified sampling, you break it up into groups. Let's say we speak about invoices below 5,000, 5 to 50,000, something like this. Make groups. And in some groups, you apply sampling, whatever method you want to use. The other groups, you examine completely. One of the questions you normally ask the auditor is, what made you choose a particular group for 100% examination? Does it mean high value items only something will be wrong, low value only something will be wrong? Generally, auditors don't have an explanation. They say high value, high risk, but we need to identify. So if you're stratifying, it's better we run the same technique on all the strata. And also to stratify based after a histogram plotting or some kind of a classification, so that we can justify and say, look, I was looking for this many items. So this group, 5 to 50,000 have n items. 50,000 to 5 lakhs also have n items on, and 5 lakhs onwards I have n items. So I took the same method of sampling. Makes it a lot easier for the audit committee, particularly if you're working with NBFCs, banks, where accounts get sampled. The audit committee gets very worried if we don't have a proper basis for sampling. Industry manufacturing is a little more easier. Systematic sampling is one of the older techniques. You choose a gap. Within the gap, you pick one value. Suppose we made it into slabs of 100. 1 to 100, I pick a random value. Let's say it's 83. 83rd item, then 183rd item, 283rd item, you pick these up. So maybe these are very simple. This will do for the audit sampling. As I told you when I started, better to stay with the 100% because frauds have also started studying sampling. So what I meant was the thieves also study sampling. So they know exactly what a sampling method will pick up and what it won't. Judgment sampling is completely human-oriented. It's based on discretion. We say judgment, better not to rely on it because we will not be able to substantiate it in case of a serious problem. Small problem we can manage, but serious problems we cannot substantiate. Because the problem is the audit chairman has got one point of view, auditor has a different point of view, statutory auditor is talking something else. It's going to be a headache. So just avoid the judgment sampling. We always say consider the specific audit objective. Is it revenue leakage? Is it expense reallocation? Or is it like you're expecting ghost employees, suspecting ghost employees? I mean, there are various reasons why you look at data for audit. The objects may be different. Objectives can differ for each segment of the audit. I mean, that's fine. You can do that. Now, we also say the population, because when you look at the COSO's RCM, it indicates if you are using sampling, you must say which population you took it from, what was your specific audit methodology to take it, and what did you get out of it. You may have to work with more than one sample if necessary. Why the population is specified is, if we have missed out something important, then people need to know. That's why we have to document it. I also have a note on these working papers, theoretical note. Thing is, a lot of companies today, they buy these computers, they have servers, they scan documents, they put them in these servers, everything work papers, because even some of the offices we deal with the same headache. Don't write anything on paper, put it, scan it, put it somewhere. And some offices were a little financially better off. They started buying this Office 365, so they get 1 terabyte storage per person or something, cloud-based storage. Now they put all kinds of stuff there, right from the management representation, appointment, statutory audit, internal audit, all kinds of stuff, even photographs of screens and documents and so on. Now, all this, I mean, this is a small slide, but I wanted to look at the serious part. Now, in the Indian Evidence Act, Section 65B, we got a big headache because I'm not criticizing anyone, but if you look at blockchains and cryptocurrency, the RBI is outdated. If you look at electronic governance or electronic whatever documents, the judges may not be up to date. So we are applying our traditional laws to work with abstract things like electronic documents and so on. Now, we can't change the law. I mean, we are subject to the local laws of the land. Now, this particular section says an electronic record can be admitted as evidence only if it is accompanied by a certificate. I didn't write this, just copied it from the Act. So, by a certificate signed by a responsible person, definition of responsible is very wide, describing the manner in which the record was produced, as well as details of the computer or device that was involved in the production. This I have again copied from the IT Act. So let's look at all the problems now. We have put it on the central server, some apprentice, server manager, director, partner, somebody put it there. Now, whom does this computer belong to? So we say this electronic record, if it's only accompanied by certificate, who's a responsible person, who will take the responsibility for signing that the server was under his control, documents there are genuine, etc. Then we had a Supreme Court case. Okay, what they said was the owner of the device was welcome or free to step into the witness box, prove the device on which the record was first stored is owned and operated by him. And then they said, okay, it's fine, we'll take your evidence, or not possible, no option. Then you have to get a printout and you have to go with the UET, that's the Uniform Electronic Transaction Act. It's a California Act, but it's globally accepted. That every printout is an original unless we have a digital date stamp on it. Now, the problem here is if you've got Excel sheets, you've got all kinds of stuff in the computer, and you have produced a printout, it can be large Excel sheets, large whatever we have got. This whole section makes our electronic evidence completely useless. So basically, we keep the evidence because you want to protect ourselves. It's for the auditor's comfort. You want to face cases, disciplinary action, negligence, okay, whatever the problem. This particular section is making things very difficult. We don't have a standard on this from our institute, and neither from the other institutes, so all the other global institutes. Now, this particular case I've quoted is when WhatsApp messages were trying to be used as somebody trying to bring in as evidence. Today, lots of people just photograph things, use a scanner software on the phone and send it on WhatsApp. Even we do a lot of stuff on this WhatsApp. There's a lot of problems. They said you can't do it. It's not possible to bring it in. Of course, the learned judges, some two judges agreed that this whole section is wrong. They copied it from a repealed act from UK. Somebody copied it. Some bureaucrat must have done it. UK doesn't follow this anymore. We are asked to struggle with this. And my question now is that, or rather my statement is, if we are following electronic evidence and discarding everything else, like dump everything on the server kind of, then at least we should be aware of these issues and we should take sufficient precautions to make sure our data is acceptable in a court of law. Now, what I will do is I will just quickly run through two documents which will explain whatever I have told you so far. Now, this is called an audit program. There are three things here. There's an audit calendar or schedule where you work out your days and effort, and they call it ETC, effort, time, and cost. The second document is the audit program. What are we supposed to do? What are the steps we are supposed to take? The third is, of course, our checklist. They call them tools with a checklist. Some audit tools we have, so you could use those. So it's not on the checklist. It's not on the schedule. This is the audit program. So if you are taking up an audit, these are the steps we'll have to use. These are like you can use these formats. You can modify them. Okay, this is planning and administration. Is this a repeat audit, follow-up audit, etc.? And who's going to check this up? And any working paper reference. You can make this more elaborate. Just for the class, so more for an academic discussion. It's got the main points, but the columns here can be increased. Then you do this pre-audit interview with the auditee I showed you in the 7 steps. First you do a scope, do a preliminary survey, and then of course you write your scope and then go ahead. Then you note down all these things, like following should be discussed. Sometimes you go to the audit, there's nobody there, they say delayed, come 2 days later. A lot of problems you face. So if all these are like documented and discussed and closed, particularly for small organizations which don't have the muscle power to control the client, these will be useful. Then we have the engagement memo approval from the managers, etc., audit directors. We're assuming there are people like these. Otherwise, it's just the partner and the senior staff. Then you schedule these start meetings, kickoff meetings, whatever. Okay, everything is on the timing of the audit, which is extremely important. And key contacts, as a general rule, don't keep changing the key context, because that leads to a lot of trouble. So then we have the other audit steps. You send the information request, and then you prepare all these documents. Your field work, this is the program, of course, you have to finish it. You have all these steps to be done. Each of these objectives, whatever I told you, every audit has an objective. HR would have had an objective, data would have had an objective, credit has objective, etc. And thereafter, any communication of results, and then you close out and submit the report. So that ends the audit steps.
Sir, Jacob, sir. In
Yes,
fact,
yes.
the slide is stuck at audit program template only. Are you trying to? Is it
Okay.
what is intended?
One minute, sir. I'll just change it. Okay. If you have any problems, just let me know immediately.
Yeah,
okay. I'm sorry.
I was just watching, observing it.
Yeah. I'm sorry.
Thank you,
sorry.
sir.
Now this should. Is it visible now?
Yes, sir. It is visible.
Internal audit. Okay. Fine. This is the audit program which I was reading out. You have the steps. I said these are the columns you can increase. Just note this is for academic purpose. Feel free to use it. There's no royalties or anything on this. Only thing, if you're stealing from another firm, make sure you edit a little bit. But these are just academic, so don't bother. You can take these and modify them, but increase the columns here. We only have who did it and what's the working paper reference, but please increase the columns. That's important. So what we are saying now is, on the planning and administration, same thing what I just now told you, repeat or follow up. Do we have a pre-audit interview? Then all the timings for each of these, who has fixed the appointments, with whom did they fix, everything is recorded here. You will need these documents. See, what will happen is, as the earlier speaker said, even if the audit is small, this discipline is not so much for the company, the client. This discipline is more for the audit firm, because in the smaller firms, the attrition rate is very high. They use apprentices who disappear for exams, leave, all kinds of stuff. So better documentation actually helps the small auditor. It's very safe also, because we don't know what this the employee did, and he'll certainly disappear. At least this document will have, okay, whom he met, what he did, when are we supposed to meet them, something we'll have. Okay, then the field work. This part, of course, I told you have to finish this, because each item will have an objective. So it could be anything, stores, material, shortages, a whole lot of stuff you'll have. Depends on the scope, what you're doing. See, the whole problem is internal audit. If you're sticking to financial audit, it's not very, okay, the two things. One, it's not remunerative. The second is extreme competition. So if you move into operational audits, internal audits, you're far better off actually. And then when you communicate the results, as I told you, you can have other sessions like storytelling on report writing and so on. So you could use a lot of graphics and presentations. And then when you close out also, just make sure when did the draft go, who checked the draft from your side, the audit side, audit firm side, client side, who checked it, what is the date of return response. Because otherwise, they'll call you one morning and say the audit committee is asking for the report. You'll need to have evidence that you did your job properly. Now, I'm again changing the slide. Now, the second document is also a specimen. It's an appendix from academic material, so you can feel free to use it. This is called the internal audit plan. Now, there was a better book, but I couldn't find that, so I took it from this. Anyway, this is a shorter version, so it helps us also. Now, okay, these are all the theory, all the contingencies, etc. What I want to concentrate on is the forms. See, this is the thing here. We have what is called the internal audit plan, and the focus on the organization's key risks. This is the document which both the earlier speakers referred to when they spoke about the part about the risk control matrix, the process flow charts. From that, you will have to work out the risk rating. It's subject to some extent, but I suggest we use the international formula for risk rating. Sometimes it's a bit harsh. Of course, that you could negotiate. See, the thing is, we say tone at the top. Some managements are honest but ignorant. Some are dishonest but very, very smart. that you will know. I mean, based on that, you can tone down the ranking or increase the ranking. That's we cannot use a strict formula. We can, but not for the small clients. So here we'll have, suppose there's a failure of a new finance system. If you think it's high, but if it's parallel, no problem. He's got Tally running, then he's using some B1, SAP B1 or something, you're fine. He discontinued the Tally and started B1, ran into endless problems, then yes, you've got a problem here. So like that, it's only an example. So like that, you'll have to put each of your risks, rate them, and say where you're having the problem. Now, for instance, this occupational stress is not relevant to manufacturing or even a hospital, it's not relevant. But software companies, BPOs, yes, that becomes a headache. Though railways, electricity boards, BPOs work night shifts, BPO fellows will get stressed. Hospitals, railways, nobody will get stressed. They're all happy. So you look at the industry also. So this rating is not just the management oriented. It's also the nature of business, age of the employees. I mean, have they fitted? Do they fit in? Don't fit in? Okay. It's a bit of work you'll have to do. Like that, you have to put in all your risk factors here and then note down. Now, moving further, we come to what is called the 3-year rolling plan. Any internal audit should cover the entire audit in a period of 3 years. You don't have to do everything in each of the 3 years. Like asset verification can be once in 3 years, but something like collections, etc., you may have to do every year. And within the year, you may have short periods also. So if you're on a risk-based reviews, like we got something called contract management, some department reviews, etc. Finance system implementation, because we said high risk on top, we're going to do this every year actually. And then these are all the hours you put in there. So you have to bring in what you'll do in the first year, what you'll do in the first first, second, and third year, or only in second year, only in the third year. These things will have to be broken up and get this plan approved by the audit committee if there is one, otherwise it's the owners. Then we also have to look at other reviews, corporate governance, which today we have to make a noise about it. The structures, particularly subsidiaries, investments, holding companies, and the whole process. Then costing, check again, suddenly cost audits become applicable. A lot of issues come up here, mainly because of the pricing, this value-added tax, the GST, and so on. You also have to follow up with now sickness management is, even today we had this problem. There are a lot of companies with good employees who take leave and do private business, air conditioning, vehicle service, whatever. And if you notice a pattern in the leave, obviously these fellows are moonlighting. They're taking leave here. The loss of pay could be less than the money he makes outside. It's because of people's dishonesty, also the client. Let's say a client who owns a luxury vehicle calls a mechanic out to repair it in his house. Okay, the mechanic is doing something wrong. As far as the company is concerned, the client also is equally fine. Can't do anything to the car owner. You can only catch your stuff of the company. Okay, then we have the others. Okay, this is fine. Then we have one more, or two more actually. Risks not subject to internal audit review. If you're asked to do it, think it over, because these are very difficult. Defamation, professional negligence, redundancies, influential connections lost, particularly death of a person. Now, after COVID, a lot of companies lost senior people, management, marketing, so on. They are finding it a bit difficult now. Then failure to prevent major incidents, usually court cases or some headaches like this. Okay, these are all the where you did not agree on the scope, but if they have a bearing on the organization, talk to the management. If they agree that you need to do some work, maybe some of you may be in the film industry, they got unions there, but it doesn't affect certain types of work. The actors disappear, or if you're on digital movie distribution, books, music, then you got different IPRs, different kind of problems. Okay, lots of problems are there. Then you also have statutory non-compliance, which could mean small vendors, small businesses going online. Now, these fellows don't understand anything about online business. Anything you do online is taxable, and now we have this OCEG and The others have gone in for this transfer pricing. So we have to make sure that they understand that once you sell things abroad, and particularly if it's Europe, then GDPR applies. Small guy is selling handicrafts, he's selling some stitching blouses and selling them online or something, but you got to explain a lot to him. So that's that thing. Next is your annual plan. So I mean, this is more for the audit. So when you start, when you end, what's the field work, days, etc. So if you use all these documents, it'll be easy. And then what's the performance indicators for the audit firm? Today we talk about KPIs and KRAs for the audit firm. You could fill these up. Maybe we won't achieve it, but that's okay. At least we'll have a template. We'll have a benchmark. So next, maybe after 1 or 2 years, this will become perfect. Growth comes with a lot of this documentation. So these are the basic documents used. Both are academic. I can share it. You can modify them as you please based on your requirements. You could change them. So now just coming back to my slideshow here. Okay, so we saw both of these. I'm just summarizing what we did today. Your internal audit process starts with planning, goes to execution, reporting, and then, okay, monitoring is a part of your execution and reporting. And of course, the monitoring is also a part of your exit programs, exit strategy, and also client feedback. So in the planning, you have all these. Okay, on the planning, you have all these. You have the audit client, competencies, independence, etc. On the execution, you have all these audit techniques, data gathering. Each will be done by different speakers. And the reporting, of course, I said you can bring in the visualization also. And the monitoring, we have all the monitoring part of it. So, okay, so this we have all the monitoring, etc. This is a summary of what I've told you so far. We saw some formats to help us with each of these. These parts are discussed as 7 points, from your preliminary study up to your exit strategy, exit meeting. And these are all the forms wherever you want to use. And some of these, like audit techniques, we just covered sampling, data gathering, we didn't touch. The work papers, I just warned you on the electronic part of it, and so on. I think so we can close now. I can take your questions, or if you have asked me. So I've stopped sharing. So
thank you very much, sir. Thanks for the excellent thing. In fact, what has happened is we have overshot the time. And, I think it was on the fault of any of the speaker. But yes, I agree that some part of the inaugural and all led to overshot of time. So it's already almost 7:45. So what we'll do is we'll just take up we'll tabulate the questions and then take up tomorrow, or we'll just try to send a
sure, sir. No problem. No problem.
It would be better because I think because it's almost more than 3 hours.
Yes, it's almost an hour. Yes. Sir, also if any of the candidates want to see this RCM or any of these things, I have a lot of YouTube videos also. They're also on the LinkedIn. But I have to go to my channel, Paul Jacobs. They can see it, no problem.
What's the name of the channel, sir?
Paul Jacobs, sir. My name.
Paul
Jacobs. So it's on YouTube. I'm also on LinkedIn. They can see the posts on LinkedIn also. Just share as much as possible, sir, so it's useful to them.
No, definitely, sir. It will be because the way you have presented and all, you have gone through every aspect of it. Samit, sir, really hats off to you. I know that internal audit is, yes, as Daya sir has rightly said, other audits may stay, may go, or they might come in a change format. But internal audit is something which is going to be strengthened down the line, and it's good that some good standards and some good legal backups and all are also given provided to internal audit. So, and it is a good opportunity for many of the younger chartered accountants who are good on systems to take care of this internal audits and do it well. So friends, on behalf of the Internal Audit Standard Board of ICAI, Hyderabad Branch of SRC of ICAI, and all the committee members and Central Council member, we thank Sharma sir, Samit Saraf sir, Jalkar sir for sharing your views and setting a consolidating our innings, if I call the cricket terms, because we have a match starting in 15 minutes. So I can say consolidated the innings, and that we can be speakers for an excellent second day. So ask all of you to join tomorrow for an exciting second day. So I think thank you very, very much, sir, for being with us, and we'll get back to. I hope that such sessions, if they could have been done in a physical format, would have added a lot of value, lot of interactions of members with you. We hope to have it very soon once the COVID goes away completely. Thank you very much, sir. Thank you.
Thank you, sir, and thank you, the entire team, and all the tech support, other speakers, all our audience, and all those organized. Thank you very much, sir, for the opportunity.
Thank you, sir.
Thank you.
Thank you so much.
Thanks so much.